dealer has that, and he'll, you know, he'll sell it, borrow it, or whatever that case might be, but he's going to fulfill that order. The way you look at the, you know, the way I look at the market is not necessarily is market overbought or oversold, right? I don't use such concepts, and not a lot of people do in this room. And I'm okay if you use RSI, whatever you want to combine it with, the more confluence you have. But sometimes when you do too much, I think you can get the paralysis from analysis, right? Where you're looking, RSI is telling you one thing, MACD is telling you another, Ochimoku Cloud's telling this, and you're like, what the fuck's going on? I can't make two things together because one is telling me buy, the other one's telling me sell. Honestly, the only thing that does matter is when you're in the market auction is the price being accepted or rejected, right? If people are accepting a price at a certain level and they're willing to pay that price, that means most likely the price is going to search higher, right? And if the price is being rejected, well, we're not liking the price of a product at this level. Therefore, what is the price going to do? The price typically sells off in search of what? Buyers, right? You have to bring the price of something so low for the buyers to step in. And in the quizzes that you guys took, right? Some of you guys were, you know, why does the price go higher? What does it search for? Why does the price auction higher?
Value. Looking for sellers.
It looks for sellers to shut off the buying, right? You go higher to shut off the buying, right? You're looking for sellers where they're going to sell and stop, right? And as the opposite is true as well. When you're selling, why do we sell off?
To shut off the selling.
Yeah, I mean, you're looking for somebody to come in and say, hey, this is a good price. We'll go and buy it here.
Yeah.
And, you know, there's different concepts that we're going to cover, right? You can't, some people are like, oh, the market profile is the holy grail. Market profile is based on time, but then you have volume, right? I mean, we covered multiple times. An auction without participants is not going to be a really healthy auction, right? And that's your volume. Volume is your participants. How many participants do you have at these levels tells you if they're, you know, if they're involved or not in size. When you think about, you know, going back on 4140 level that we just recently hit, it was a big level. I mean, we went to all-time highs from it. We hit it, and there was a lot of orders sitting, and then people felt like, right, whether it was a, you know, Christmas bonus rally for the big boys or not, they felt like they needed to buy, and they just kept buying, and we breached the all-time highs previously at 08. And now we're kind of below it. And we haven't really seen a strong sell-off yet, right? Just going back to the current market, we haven't seen a lot of selling yet. This little pullback is, you know, maybe shake out some weak hands, and then maybe they continue higher. And then we can use whether price was accepted or rejected using higher time frames, smaller time frames, right? And we'll get into it. But when the price is being accepted, for instance, if you look at the bottom left, you use the value areas of that breakout or the ranges to make sure that it's being respected. A range means just a high and a low, and the value area is the 68% of that volume of that range. Where is it? If you fall back inside of that, that means the price is not being accepted higher, right? If you know, if you're accepting it, once you come to the retest like you see here, that means price is most likely going to be accepted to go higher, and we're going to proceed. Rejection looks a little bit different. You crack inside and you're not able to auction higher than that level previously because the sellers are saying, hey, the value here is not that good. So then you auction lower until you find value where the people are going to come in. And you guys experience this daily in your life. How many of you back in, let's say, was it 2008 when the gas prices jumped to like $4 to $5, sometimes $8 in California? How many of you guys looked up to see where the cheapest gas was? Or if they had gas? Well, everybody looks for something, and every day you guys look for something, right? Whether it's bread or whatever you're buying, right? You're looking, maybe you buy it at the same place, irrelevant of the price, because you like the person or people. But sometimes people look for the deals. They look, and if the price is out of what you believe you should pay, you're not going to buy it. And that's how I look at the market. It's whether price is being accepted or not, right? When I initiated a long position in Pfizer, I posted on Twitter, and a lot of people are like, man, you need to see a green candle before you buy it. By the time they saw a green candle, I was up 13% on my position. And that's the opportunity part of the market, right? The opportunity comes if you're there, that's great. If you're not there, then you might have to wait for 13%, and then you're going to wait for a pullback, and then you're going to buy it. But that's the different mentality of trading, right? That's his style, or whoever she commented on the post. But it stuck to me. It's like, okay, so you're going to miss 13%, but the value was here at 25. But value for me might be different than value for Cuban. Maybe Pfizer is not good for, Cuban. Maybe he's going to wait for 16. But what if 16 never hits? I think 25 was fair then. What is Cuban going to do then? Well, Cuban is either going to have, an emotional buy where he's going to buy as part of the imbalance, or he's going to wait until it hits 16.
Yeah.
Maybe he will get to see that. Maybe he will not. So different people, different value, different time frame buyers and sellers, they determine what is their value. What's valued to me and you on a daily might not be valued to a longer time frame participant. They might treat it differently. We drew this, I believe, a couple of weeks back, where you have, how does it really work? They place the bids, right? Then you have the offers, right? Somebody selling, and once they match the highest bid and the lowest offer, once they're matched, that's how you get a sell, right? That's how you get a transaction. You get a transaction, and then, I'm adding some pieces and bits here in this class, but if you have a ask minus bid, what would you get? What does ask minus bid provide you? What type of information?
Delta?
Delta, exactly. It gives you the delta. So now you see everything that we do is related to really the transactions that happen. You're looking at the transactions and you're watching, right? So ask minus bid gives you the delta, right? And we look at the delta from footprints perspective to see, are we getting an absorption? Are we falling down on positive delta like we did Friday? We had a couple of instances, right, where we looked at that, or opposite, right? Remember, we were on NQ, we were bidding much higher. Me and Drew were on live, and we were like, man, this has to go to 50, at least 52 when it revisits. And it revisited 50, and it went lower than that, right? Because the participants were not in that auction, right? The big boys were not buying. They were selling while they were creating, kind of a little bit of euphoria for people to buy their inventory. Okay. Does this graphic make sense? Anyone have any questions?
No.
Okay. So I think we covered this slide pretty much, right? What it does, and there's the famous peanut butter, right? Dual action process that basically auctions up until there are no more buyers, right? And then it reverses down and moves down until there are no more sellers. Market moves up to shut off buying and moves down to shut off selling. Can everybody conceptualize this? Because I honestly think it's opposite of what most people think. Or is it not? I feel like a lot of people just sometimes think of differently in the stock market when they see these auction theories. Does everybody understand this? Can align to it?
Well, you got to think like a wholesaler and not a consumer.
Yeah, exactly.
I think that helps.
It does, yeah. So, and I give these silly examples, and I learned this from my teacher, like 25 years back in finance or more. She would give us these silly examples in complex finance, and those are the examples that stuck in my head. So I figured if I give you guys silly examples, you guys will remember them, right?
Yeah, we do.
It's the same concept when you buy, whether it's peanut butter, whatever you buy.
It's
If
like
somebody gives you Jiffy peanut butters at $20 a jar, are you going to be eating peanut butter that day? Probably not, right? If you're used to paying peanut butter $4, let's say at this a jar, you're not going to be paying $20 a jar. You're going to wait, or you're not going to just buy it at all.
Right.
And I've given you guys examples and scenarios, right? When I go to grocery stores, I take pictures. I don't know if you guys remember those. What was that fruit?
Dragon fruit.
Dragon fruits. When the COVID hit, it was $2 for 18.
Jesus Christ.
And my wife was pregnant, if you guys remember. She sent me fucking dragon fruits. I was like, you know what? I'm not buying dragon. I'm gonna tell her there's no dragon fruits. Because if I bought it, what would I tell the people that check the inventory in the store?
That you accepted it.
That I accepted the price,
Yeah,
and I'm willing
prepared
to
to buy
pay
it at that price.
$18 for 2. So what does that do for a person that can't afford it?
Price would
It
either stay.
justifies the price. It's gonna
Yep.
stay there because there's a buyer at that price. It's the same thing that you guys experienced with the cars, right? I would say there's a person in the Discord, I think he might have, Acne Man, remember him?
Yeah.
Well, he was good with the cars, right? And he said that there was a Toyota RAV4 in California selling for $90,000. And I'm like, what? A Toyota RAV4, the little SUV that's like 35,000. If there's a person willing to buy it, they're gonna keep selling it at that price. So me declining to purchase and not accept the price of those dragon fruits at 18, then I posted a picture a week later. Those same dragon fruits were 2 for 6. Okay, well,
That's a big difference.
that's a big difference. I'm willing to pay $3 a pop. I'm not willing to pay $9 a pop. And when it comes to food, especially, produce like that, it's perishable. Right? So it's in their favor to try to sell at the highest price and then lower the price lower if you're in that business, right? They're gonna try to sell the apples at $5 a pound, and as the days go lower, what do they do to the price? They have to lower it to entice you to buy the apples.
Yeah.
Because they go bad. They turn yellow. Unless they're sprayed with a bunch of shit, then they stay green forever. Okay. So the idea is the market's gonna do that, right? They do that constantly. If you just go and look at the, when we say market auction slowing down at the top, it's slowing down because there's not enough buyers willing to pay that, right? If we get new buyers and they, let's say, auction much higher than that, then your job is to wait for that level to come back to that level where they were and make sure that you're ready to buy along with them because they're going to protect that level, especially in the stock market, right?
Yeah, retest and then go higher with them.
And that happens a lot. It's just the patience of humans is not there.
Yeah.
Okay. So
Shorty,
market spend.
can I ask a question?
Sure.
So when they saying market moved up to shut up buying, is it shutting off so thinking of a price ladder, aggressive buying or just passive buying or both?
All the buying, right?
Yeah, all the
So
money.
your limit buys are if you're buying limit at those levels, somebody's selling to you also via limit, right? Most of those big sellers are sitting at the ask, right?
Mm-hmm.
Aggressive buying is also at the ask, right? That's why you can't look at ask and bid and say, yeah, this is a buyer, this is a seller, because it can be both on two sides, and we'll get to it in a second. So when they're selling, your job is to look for the moments where there's only one winner at the top, and then at the selling, there's no more selling at the bottom. We sold off everything we have. So
Yeah.
you're looking for a completion. A completed auction needs to happen. If there's a failed auction at the top, that means we have to revisit it to resolve it. Because it needs to be one winner at the top and one, seller also winner at the bottom.
Plus, usually when you see a 0 at the top and 0 at the bottom.
In footprints, you see a 0. In market
Yeah.
profile, right, you see a single TPO, and
Yeah.
we'll get to it, but we're jumping the gun a little bit. And then a volume profile, can you figure out if there's I showed you guys how before, but it's more subjective than TPO and footprints. In volume profile, if you have a skinny little line, it looks good. If it has a flat cutoff, like a little cliff, that means it's a failed auction, right? So you can identify 3 different ways to see if that auction completed, right? And depending on what type of trader you are, if you're, let's say you're a scalper, do you really care at that time if the bottom of the daily that's 45 points away is finished or not? You might, but not really, because if you're scalping for 4 or 5 points, you don't care what's 60 points away, right? Especially if the true range of for ES has been running 30 points. you don't care,
Yeah, we don't care.
right? But if you're an intraday trader, like most of us are, you look at the previous session and you see a poor high or a poor low, which is unfinished business, and it's really close. Well, most likely they're going to auction to it, sweep it, fix it, right? Have a completed auction. Then you're looking for an entry, especially if that, poor low happens to be in a bracketed market and that poor low is below the value. Well, you want to be careful shorting at those times, because below the value, what happens when something's below the value, price below the value?
And to reverse.
They tend to reverse because they're going to buy it up. There's people looking at it and they're like, man, that's a cheap price. But it might not be the intraday trader that thinks it's a cheap price. It might be a person that's a long-term buyer is going to sit on it for 20 years. You don't know, right? It might be 2 years, 5 years, whatever that time frame is. But it's a different time frame person that's coming and buying or selling. So that's why we look at different time frames. And I saw somebody post, I think it was Meow Cat, like, why do we have a monthly level on our charts? Well, monthly level is there, so I know where's the monthly value area low, because that level is fairly big. It's month worth of data, and most likely other time frame participants are going to jump in at those extreme levels. If you guys remember, on the extreme levels of monthly, weekly levels, that's where the long-term participants are sitting.
Yeah, those are powerful, man.
So
Yeah, we were back at December already.
Yeah, so if you think about monthly value area low, like for December, or December VPOC is somewhere on the bottom there. I want to be aware of that level, not maybe because of today, but what if we are to drop off today to that level, and I'm not aware of it, and I short, let's say 41.40. Well, it was a 3-year POC, and everybody and their mother thought that we were going to 4,000. But that level said, stop. This is a 3 years worth of POC. This is the fairest price we have. And what do people do when they meet a fair price? Just like I did. I bought the dragon fruits. I thought it was fair. I bought it. A stock dropped to a level, I'm going to buy it. Their job is to manipulate you to make you think that, there's blood coming, or that, you're missing out. That's all they facilitate for you to be. Because think about it, these big boys can't buy or sell, between themselves. They do, right, to a certain extent. But they need who? They need the short-term buyers to absorb the inventories and selling and buying, right? So a long-term seller working with short-term buyers and sellers, the name of the game. A long-term buyer and long-term seller are rarely involved in a transaction, guys. So that large volume that they can exchange is literally sucked up by the small guys. 1 million of us, and we buy all 10 shares of AMC. What happens? How many shares you buy?
1 million.
No, you buy a bunch, and maybe there's not enough float for that stock to be bought up, and then they have to do some tricks to get it, right? Borrowing or what? And that's what happened when people got into trading. Some of you on AMC, and what's the other one? Got the name of it.
Dogecoin and
You mean GameStop?
GameStop, yeah.
GameStop.
I know
Yeah.
the ticker, but I forgot the name of the company. So, and that euphoria, and I've seen people where like, man, I'm up $700,000, but I won $1 million, and I'm like, what? You put in $20,000, and you're up $1 million, and you want more? And what do you think happened to those people? They're no longer.
Wah.
I know a lady who was in that exact position. She wanted $1 million. She was up 600,000, and she ended up closing out losing 200,000.
Jesus.
Absolutely stupid.
I just don't know, how do you live with yourself? Honestly,
No,
Greedy.
that'd be very, very hard to live with, man. Oh my God.
I mean, that can, if you think, I'm not trying to be a financial advisor, I'm not, right? But you take $700,000, and let's say you bought Pfizer at $25, all of it. You're like, man, I'm putting all in Pfizer. You should do some math and see how much dividends you could collect every year. Probably about $65,000 in dividends.
You can live off of it, man.
Oh, dude, you go to Cuba, you go to Colombia with $65,000. And you live like a lord.
Are you kidding me?
No, I'm being serious. I mean, it was.
No, I know. I'd send a family member $60, man, and they eat all month over there with that.
Yeah. And most people don't understand that, right? And I'm not saying go move, but you gotta appreciate until you move or see the country,
Yep.
right? Let's get back on track. Questions, check your knowledge. What are the two kinds of activity? And don't make me pick you guys out. I don't want Cuban and the regular Joe's answering. Meow cat, new people. Don't make me go to Discord, please. Pick up people. Okay, I'll do that. Guys are. Let's see. Let's see. Let's see. Odds. What do you think? First question.
Buy and sell.
Anyone else? Okay, Cuban, you want to help?
Passive and aggressive.
Okay. Anyone else?
Acceptance, rejection.
Long term and short term.
Long term and short term. That's correct, right? Those are the type of two activity, right? You have
Sorry,
long-
Shorty, I had to go to the bathroom, man.
Yeah, no worries. On the next question, I hope I explained it well enough. What is it?
Shut off buying.
Shut off buying.
Shut up
Shut
buying
off.
and shut off selling.
That's correct. Market moves between what to what in order to facilitate trade.
Balance to imbalance.
That's correct. And how can we determine if it's long-term trader or short-term trader participating?
Aggressive buying.
Be careful.
If it's a longer term value area, if it's
That's-
breaching
that's-
those or hitting
that's-
those.
That's totally one of them. Okay.
When you're
Anyone
outside of the 2x IB range,
When they expand the IB.
longer term buyers and sellers are step in. That's what causes
Those
that.
are very good points from all of you. So what does a long-term buyer or seller seek?
Fair value.
Ooh, careful.
Fair
Logic.
price.
Unfair value.
Unfair, yeah.
Okay.
I want to say
Unfair price, I should say.
if I'm Apple and I want to sell as much as I can on iPhone, I'm looking for news and frenzy where it makes it look like you can't get your hands on an iPhone. So I'm looking for advantageous price to sell to you. If I can sell it at 1600, do you really
Right,
think
for the best price, yeah.
they don't care if two people can't afford it. They care about the people that can't. And it's the same thing, on buying, right? I was actually trying to buy a pair of Adidas Predator shoes that just got released. I was actually in Europe and I missed it. They got sold off in 78 seconds. And then I went on eBay to look to see how much do you guys, the shoes are selling for $400. How much do you guys think it is on eBay?
1,000.
Almost like
What?
$4,900. $5,000.
Wow.
Oh my gosh.
So the
Okay,
opportunity was there, right? And there was people willing to buy at $400 and they fucking bought them all. Right?
So long-time traders looking for
They buy,
fair
they
price
always,
advantage.
yeah, they always buy at, they buy below the value, right? And they sell, their job is to sell above the value to you and make you feel like that you need that.
And the short-time traders looking for price within the
Price.
range,
The short-term traders
looking for
they
fair
want a fair
price
price.
within the range. Yeah.
That's correct. And when the price is stuck in a range, when it's stuck there, that's called a market auction. That's negotiating process. If you've ever been to a market, flea market, or I don't know where you live, like Boston, New York, if you go to those, or Philadelphia has a really good one. You go inside, some people negotiate the price. This guy's like, I can do $20 a pound for this, and this guy's like, man, can you do 15? The guy down there is selling for 15. You can experience this still, right? People are negotiating. Some people say, was it haggling on the price, right? I mean, if you go to a car dealership and you're like, hey, I want that car. And you don't try to understand the price or put in a lower bid. How many of you guys think that it just happens like that? I want that car, they go in, whatever their ask price is, and they buy the car. How many of those deals do you think happen?
Way too many.
They do happen. But do you think there's also a negotiation aspect where a person
Oh,
comes
yeah,
like,
for sure.
Oh, I see.
Always,
Yeah,
always.
yeah.
And they
I
try to
want the-
sell you stuff.
Of course. I mean, I go for oil change with my Forerunner. I go in there, and the first thing that I'm telling you, I'll record it next time. I come in, and a salesperson comes in. Hey, do you want to trade it in? And I'm like, yeah, of course. And they're like, oh man, I see the excitement in his eyes. Like I see it. And I'm like, okay, great. I was like, I'll take the Sequoia Pro, and it's priced at $90,000, 90 to 100. And he's like, yeah, we got the. I'm like, yeah, man, you have the one I want. I get him so pumped up, and he's like, all right, great. And he's like, we will offer you 36 for yours. I'm like, oh, I was looking more like 78. And he was like, I can't offer you 78 for yours. I was like, I can't pay 90 for yours. I was like, I can do 56 for yours if you're giving me 35 for mine. He's like, man, I can't do that. And I'm like, I'm sorry, we don't have a deal. I pump him up and then I bring him back to ground. So you're pricing your asset at such a high price, but I can't price mine at such a high price.
Yeah.
And that's the negotiation, right? And whenever they see me now, they just say hi and we say buys, and they know I'm not gonna buy their car at $90,000 because they added $5,000 of paint protection and window shield, whatever crap, worth $5,000, because that's pure profit, right? But my car also had that when I bought it, but you don't value it anymore.
Yeah. So when it's seeking value, it's a neutral day, right, Shorty?
Always a neutral day. And then,
Okay.
sometimes you've seen it. We've had it happen 2 times last week. When the price breaks the IB on the high side, IBH, and breaks the IBL and closes inside, what does that tell you?
Not accepted above.
Well, that tells you decision. The market is not confident. Market doesn't have an idea where to go. They tried higher, we failed. We tried lower,
Yeah.
we failed.
Yeah.
80% of the time, you're going to revert back to the POC. That's called the reversion to the mean. When you can't find the highs and the lows, you're going to be stuck to the POC.
And short terms are in control there, right?
Yep. So this is what we covered so far. Short-term trader wants fair price. The best thing he can aim for is fair price because he's considered a day trader. A fair price is desirable for both sellers and buyers on a short time frame. Therefore, short-term buyers and sellers trade with each other. This is where, a lot of times I've heard you guys say when we're in a price range, I think there's a few of you that are really good trading the range. I'm really good at trading the range as well. And the problem starts when we break the range and you try to fade the breakout and you keep shorting. What happens then?
Keep getting
You have a
clapped.
losing day.
You have a really bad day and then you start doubting yourself emotionally and you're like, okay, but when you look at the market, you're like, okay, well, market's telling me that we're accepting the prices higher. And, if you guys remember, I trade orbs. I traded orbs for a while. There's people on the floor that trade orbs using 30 seconds.
Wow.
They determine the whole day based on 30 seconds open. 30 seconds that open. The high and the low of the 30 seconds.
Yeah, I've heard of people in 30 seconds, 1 minute. Holy shit.
When you say the floor, what do you mean on the
Like
floor?
the actual floor on New York.
The trading floor. Oh, okay. Okay.
And when you think about us, we're a short-term trader, but there's a lot of shorter time traders as well, right? And those are participating just as we are in the brackets, right? They find a fair price and they trade in between. A long-term trader, and you can see, right? I won't cover too many, anatomy of market profile, but when we see the single prints on the bottom or single prints on the top, that's another way to tell us, okay, somebody else entered into the market. And then if you see single prints in the middle of the profile, that's also somebody that's fairly emotional and aggressive buying. And we pay attention to it, especially when it's, let's say, a double distribution day, when it's a long B, right? That's being separated by single prints. We pay attention to it because that's somebody else initiating acceptance in the, the top distribution.
Are those called the other time frame buyers or sellers?
Yeah, exactly. Those are the people, other time frame people stepped in and they drove the price between distributions from the bottom to the top or top to the bottom if it's bearish, right? And we had the scenario happen when we were trading live. Remember, I explained if we crack below this level, we're most likely going here.
Yeah.
And they happen often. Okay. And just make sure you understand the bottom, the tip. Does that make sense? Can you guys visualize that? If I was to just close your eyes, can you see that on a chart?
Yep.
As a homework out of this, the bottom tip, I suggest you guys go back and look at the last 3 weeks. And you should find that this occurs a lot. Right? It happens a lot, and especially in the month of December, it happens a lot. Because, long-term buyers, they either sell at those advantageous prices, right? And then we fall back inside, and the short-term traders take away and they trade their value. Okay, we'll skip this. We cover this. The components of market auction theory, I believe most of you should be familiar with this, right? Time, price, and volume. Price is used basically, it's your discovery tool. And I think we can name thousands of examples on how you can use that. Time basically, regulates the market. It's your opportunity. How many of you, let's say, how many of you wish you bought, if you had $1 million, you bought $1 million worth of Pfizer at 25 and sold it at 30?
Everyone.
The time was to buy when it hit 25, the value area low of a really long trend. If you sold at 30, you just collected how much? You
Oh my
collected 20%, right?
Mhm.
That opportunity and the time was there for a short period of time and it was gone. And then if you look at the volume, right? What did the volume do? Well, if you look at the candles, right? If you just look at the regular, Japanese candles, and you look at the volume, does it justify the bounce? Is there a lot of volume at that level? Did other time frame participants step in and are they part of this auction? And when we look at the time and sales, right? The other day, I believe KJ asked a question in the chat where she said, when I look at time and sales, what do I pay attention to? Well, for NQ, I'm filtered usually above 3, right? Because NQ has a lot of single orders, right? Now, I don't care to see a bunch of singles, right? Can those singles add up to a lot? Yeah. But I want to know when the guy steps in and buys 50,
Yeah,
100,
yeah.
200. When I see those orders,
I
me and Drew
jump
were
in.
trading live the other day. Remember the 54 level on NQ? I can't remember the before numbers, but
Yeah,
I know it was 54.
Yeah,
We saw a
jumped right
huge
in.
sell, and then it popped, right? And I'm like, man, what is this guy doing? Like, it was 260 contracts. Drew's like, he got clapped. He was clapped because he went like 30 points higher.
Yeah.
But is 30 points higher really something that's going to push a guy that just put in a notional value of a couple of $1 billion out of his position?
No.
Probably not. And that, moments after, maybe 30 minutes later, he probably made $1 million on that
Yes.
trade. But he knew his risk, he knew all the aspects, but the price at that level was good for him, the timing opportunity of that hitting, and the volume was there to confirm that level, right? When you combine those 3 pieces, that's where you get value, right? You really get the value based on all 3 components, and we pay attention to all 3 of these through market profile, through volume profile, and then the footprint shows the actual volume, the size, the bid and the ask, right? So I cover these. I kind of want to speed up to get to some of the more fun stuff. So the type of participants, I think most of you should know this by now. If you don't, there's aggressive and passive buyers and sellers. So a quiz would be on what side our aggressive buyers show up on the DOM, or let's say on the footprint chart.
On the ask.
Aggressive buyers on the right and aggressive sellers on the left.
Okay, and where are the passive buyers showing up?
Opposite of that.
So passive buyers are on the ask. Is that correct?
Yes.
No,
Passive
that was
buyers
actually
on
a question.
the bid, right?
Buyers on the bid. I was just making sure everybody's on the same page. Passive buyers sit on the bid. Passive sellers sit on the ask. So you have aggressive buyers on the ask and passive sellers on the ask. And then you have passive buyers on the bid and aggressive sellers on the bid, which
Is
makes
the
it
bid on the right or the
no
left?
bids on the left.
Left.
Bids on the left. Okay, sorry.
Yep. Yep. Sounds like you're dyslexic like me.
Sorry.
I think I'm like that too, man.
Okay. No, I just want to. I ask opposite sometimes just to make sure you guys are okay. So
Can
this
you
is like
explain that one more time?
yeah. So when you have and there's a slide, we'll get to it. You have aggressive buyers on the ask when somebody's buying at the ask. So think about it this way, right? And who's asking? Just so I remember the name.
Ian.
Okay, trade. If I'm selling, let's say I'm selling my PC, right? And I give you the details of the PC and I'm asking $3,000 for it. And you offer $3,000 for it. Is that an aggressive buyer or an aggressive seller?
Aggressive buyer.
Aggressive buyer.
Yeah, aggressive buyer. Let's say the same PC. I want $3,000 for it, but you offer me $2,800 and I accept as a seller that price. What type of transaction is it now?
Aggressive
It's still
seller.
aggressive because you still sold it.
Is it aggressive seller or aggressive buyer?
So
Aggressive seller.
It's an aggressive
Passive
seller.
buyer.
Say it again.
I was just saying it was a passive buyer if he puts his price at 28 and you have to come
Well,
down to 30. That's
exactly. Remember the first slide that we had? The highest bid price, lowest offer price. If the lowest offer for me was 3,000, right, that I offered, but I accepted 2,800, that makes me an aggressive seller.
Correct.
Okay.
Yeah.
And his highest bid was at 28. That makes him, the highest bid on that position, right, for that individual. So that 3,000 PC, if I'm willing to accept lower as a seller, that makes me more aggressive. Just think about regular life. If you go on Marketplace on Facebook and you want to sell something from your house, if you guys remember the fridge that I auctioned with you guys, the wine fridge, I put a wine fridge that had like 150 bottles space. I put it for 50 and I could not stop the fucking notifications on Facebook. Everybody messaged me at 50 because it was below the value. It was a $500 fridge. I'm selling it for 50 and even the reseller saw the value. I'll buy it and sell it for 200 and he's going to make 150. So what I did, I removed it from the marketplace and a week later I put it for 200. I still got interest, but not nearly as much. So if I was to accept that fridge of 50, that, if I asked 50 and I got 50, well, then fair square, right? Somebody got value and I got whatever I wanted out of it.
Yeah.
But in terms of stocks, right? If somebody's selling at bid, that's an aggressive seller. If somebody's buying at the ask, that's an aggressive buyer.
Yeah.
Okay. So let me show you the slide that might help with this. Where the hell did this slide go? Well, okay, here it goes. So do you guys remember this? Does this help traders? So now if you look, right, the left side's your bid, right? You can have an aggressive seller show up here, and like on the bottom or on the top, you could have passive buyers show up. On the right side on the ask, you have passive sellers, right? I want 3,000 for that PC. Until you reach that price, I'm not selling. But then you also have aggressive buyers that drive up the price to get there, right? If NVIDIA say, we no longer are going to produce these graphic cards and my PC has that graphic card that's in demand, I potentially lift my ask from this price, lift it higher, and then you guys will have to chase and buy it. And that happens a lot, right? The dual tape concept and people just lifting the offer. So you guys have to pay more for something. Does this slide help?
Yep.
So now if you
Yep.
think about it, if only aggressive buyers showed up on the ask, if only everything that we see on the right side was aggressive buyer, how easy would this be?
Oh
I mean,
man,
honestly, the trading would be,
shit.
it would be a piece of cake.
Yeah, we would be able to predict.
You would see them, you would compare the price to the level, the volume, and you would be done.
Yep.
But even with this, we still have pretty good vision, right? When you compare, it's really the context of where the price is at that time. When you look at it, you're like, okay, well, when that 54 order happened, we auctioned higher and then aggressively lower. So what do you think that guy did? Or maybe it wasn't him. Maybe, somebody misunderstood what he was doing and they started buying while he was actually selling. Right? So on the bid, it's what you're willing to pay and ask what you want to sell it for. But also at bid, if I'm selling and accepting lower price, I'm going to show up on the bid. Does that make sense?
Mhm.
On the tape, right? When you guys look at the actual, let's say L2 tape, right? On the aggressive buyer takes the liquidity from the ask. Does that make sense? Can everybody understand that comment?
Yes.
Yeah.
And passive seller provides liquidity in the ask. This is Free asking for her shoes $104. This is KJ asking for her shoes at 105 and she has 720 pairs, right? At 106, Cuban has 900 of something. These are people providing liquidity on the ask. They're passive sellers. Aggressive buyers takes up the liquidity on this side. Does that make sense?
Yeah.
Yes.
And a passive buyer provides liquidity in the bid. If this product drops, let's say if these oranges drop to $92, I'm willing to buy 90 of them. So now it's up to the sellers. Where is it going to go? Are they willing to drop the price that low to get it? An aggressive seller takes liquidity from the bid. So if I have a lot of liquidity to sell and I'm willing to, let's say, sell 50 at 99, then the price drops to 99. And if nobody's offering 99 anymore, what happens? Well, the price is going to keep dropping till a lot of these sellers are absorbed by the buyers. That's called absorption.
And
That
vice versa if the price is
That's correct. And
going
then if you
up
think
higher.
about this, for the price to move down one level, sellers must absorb 50 limit orders. So if we want the price to go down, these sellers they have to absorb these buyers sitting there. Once they absorb them, the next one's a 98. And then the selling stops off, right? Where would the selling stop? How does the selling stop?
When there's
Sure.
no
When you
one
go past
there.
92.
When the aggressive sellers on the bid are absorbed by the limit buyers on the bid.
Yeah.
And that's where you have typically a completed auction. Okay. Does that make
Say
sense
that
to all?
again, Shorty? Again.
So if I want to go down, if the price is to go from 100 to 99, these sellers must consume these 50 buyers at 99.
Gotcha.
Once they consume them, then the price is going to be 99 or low, unless there's a market participant that comes in with market orders and starts absorbing the liquidity from these ask on the sell side. These are sellers, these are buyers. Market people are not on the tape. Does everybody understand that?
But they're on the volume, right?
They are on the volume, but not on the tape because we
Right.
don't know where they are, right? I mean, it's an emotional buy, I would say. I want it right now, right?
Right.
If I want to buy right now, I'm not planning that buy. I'm planning to do it right now. Whatever that
Yeah.
offer is, I'm going to buy it now. I don't want to
That's
wait.
market buy.
Market buy does that, and they don't show up on here because we don't know what they want to do.
Right.
Okay. I don't know. I put it all the way back. Okay. Let's see. We stopped here, right? So this is really important for you guys to understand when if you're trading value, right? I trade a lot of value, and it's important you guys understand it. Responsive activity is effective behavior, right? When market breaks down below the value, buying is expected. When the market breaks above the value, selling is expected. And that's fairly simple, right? And when you combine this slide with the slide where we say, where do we open in relationship to the previous day? it starts clicking a puzzle on how you can trade some of this stuff. Initiation activity is unexpected, right? And this is where a lot of you guys suffer. And not that you suffer because you don't understand this bullet, is because the emotions take over your logical reasoning, and you guys do the opposite. Right? And that's what I mentioned earlier. When you have a range and the IB is being broken and you're still fading and shorting that move, that's when you get in trouble, right? When the markets break below the value, right, selling is unexpected, but initiative sellers step in and they go aggressive. When market breaks above the value, buying is unexpected, right? Who buys above value?
Long-term trader.
It would be
Or
any
long-term buyer.
long-term trader that perceives
Retail.
that value. No, well, not necessarily. You could have a long-term trader buying above value because he's not a day trader. Maybe he's looking for 3 years from now.
Yeah, or other time frame.
Yeah. And that's why we have to use sometimes different time frames or levels to figure out who's engaged. Okay. On the balance, right? In balance markets, it's basically they're agreeing on price. These are your high volume nodes and volume profile. You know, if you're to visualize a volume profile, wherever you have a little fat area, that means that people are happy trading there.
Yeah.
When you see a low value area, what does that mean in terms of interest at that level?
Not much interest is gonna fly right through there.
It's going to fly, right? So usually low volume areas are imbalances, right? Those areas, you know, when you have a low volume area, right, or an imbalance, sometimes when you guys go on the footprints, what do we look for on those imbalance candles?
On the footprints?
Yeah, on the footprints, when you have an imbalance candle, what do I look for? And you know, it worked like 5 times on Friday.
Like high volume on either side of the candle?
I look for the actual imbalance of orders on the footprint to see where did the imbalance happen. Where was that aggressive buyer that stepped in the middle of that low volume node? Remember those stacked zones when it highlights 3 zones in a row on the footprint?
Yeah, we usually get
Yes.
we usually get a highlighted zone there.
You get a highlighted zone, usually happens in an imbalance when you had a balance and it triggers an imbalance, and we wait for price to come back to those imbalance areas to go long or short, depending on how price went, whether it
Yeah.
went up or down, right? And it actually happened multiple times Friday, and I would say it worked every time.
Yeah. They tend to go a little bit past and then go.
That's always what you wait for. You let
Yeah.
them dip, they reclaim, and then they pop.
Yeah.
When you have an imbalanced market, buyers and sellers that are not in agreement, that means they disagree, and wherever the price is going, that's the aggression, right? If you see a lot of orders executing on an ask and price is going higher, well, it seems like, and delta is positive, right? When you do the ask minus bid, that would mean that one of the side is more aggressive. In that case, it would be the buyers, right? Okay. So this is kind of what it looks like, right? If you think about balance, right? This was our range high, this is your range low, and here you're in balance 3 days, right? 1, 2, 3 days in balance. And look what happened. The balance range high, you broke it, right? You see the volume here is above average. The blue line is your average. We broke above it. And what did they do shortly after the next day?
Came back to the point of resistance and went higher. Support.
Retested the value, retested the high.
So something like
Yeah.
Acceptance.
Yep.
They accepted the price to go higher.
That'd be the new value, yeah.
So when you think about this, if they accepted the price higher, honestly, if you come here and here they didn't have a lot of volume at that time, but if you place an order here and you find a decent stop loss, let's say below the mid back of this candle or whatever that setup is that you're looking for, if you look at this is not a bad breakout. Some people wait for opportunity to buy on a breakout here, right? And that would have worked out. But this is a typical example of balance to imbalance and price being accepted higher. So it covers that slide that I just went back to pretty good. You're in balance, 3-day balance. You had, your value area high was somewhere around here, probably value area low, a little bit higher. We reclaimed that, we popped higher, came back and retested them higher prices and over.
Yeah.
More buyers stepped in and they continued, more aggressive buyers stepped in and they continued. Okay. Any questions so far? So I would say with this, we concluded the market option theory, the idea of it, how market operates. Is there any questions on this?
Hey, Shorty, quick question on this one. So there was, after the 3 days, the fourth day it broke out above the balance range high, right?
Uh-huh.
So would you say that acceptance is the next day after you retest that? Or would you say it is on the fourth day that there is acceptance?
So the fourth day, they did not fall inside back the range. That's telling me that there's buyers still, that they're still aggressive. And if you're to look at this candle, it closed right at the POC of that day. It's a P-shaped volume profile. If this candle, let's say we went up and we auctioned and we fell back inside below these volume nodes, that would be concerning for that day to conclude what is the message, right? But they closed in the top of that candle, right, on top of the POC. Then they did a typical move. What they do is they go below, and on the P-shapes, you're looking for high volume nodes to bounce. Or they can protect the low volume nodes. So if you look at this candle, I don't even know what Friday, October 6th, we could go back. You will most likely find that there was an imbalance, an aggressive buyer sitting here, and look what happened. They came back and they defended it. This is the day where they defended this position and the breakout of this range, and this is the acceptance for prices higher.
Okay, gotcha.
Yep. Here is another typical behavior, right? This would be a prior day high. And people would get in here on a breakout of this, right? And they gave them a breakout, but they also gave them a scare shortly after.
Yeah,
They started consolidating immediately right above it, right? And then they proceeded higher. They gave them a few traps where they put in a lower low, then they put in a lower high, higher low. That's immediate consolidation. And then they gave them another trap with the lower low. So they shook out any weak buying here, right? That had closed stops. They took them out and then they ripped again. That's kind of how I would look at it.
Okay.
It's
Yeah,
much
thanks.
easier for me to buy, and at this point, especially if there was an imbalance, than to buy here. I don't know how to buy breakouts. That's just not. I don't know how to do it. I can't click buy when they're breaking out because the price discovery mechanism. I don't want to be the first one to buy this product at this price.
Same as when it first broke out, right there before the retest, the long candle.
Yeah, I mean, and if you think about this one to me is much more probable breakout than this one. Does anyone know why? Between the two, why would I trust this one over that one?
I think it's multiple day balance.
That's one reason. What's the second reason?
You popped up above the
It's-
single. Well,
Volume.
Volume.
And look at the
Volume.
tail.
And look at the tail. On the day of the breakout, you're also in a P shape, which tells me you did not want to spend any more time where?
At a
In the
low.
value area.
In the 3-day balance, you're done with it. You
Yeah.
came back to the bottom. You have single prints. I know maybe you can't see them, but you have single prints on the bottom. You're not spending much time at all here. You're in a rush. They're in a rush to get out of here. They got out of there. They confirmed.
Yeah, that's very aggressive buying there.
Yep. And if you look at this lowercase b, is this a long B or a short B?
It's a short B.
Lowercase b.
It's a lowercase b, and it's not an elongated profile. There's not a lot of liquidation happening at this point. Usually when you have a lowercase b and it's compressed, those are used for traps. And same can be said when you have a P shape that's compressed, not elongated. Those can be used as a trap for upsides. Okay. All right. Well, the fun starts here, right? So if you're not familiar, is there anyone that's okay if you say yes? Don't be afraid in this Discord or to say, has anyone ever not used volume profile?
I am a very recent user of volume profile.
Say it again.
I'm a very new user of volume profile on futures.
Okay, good. Anyone else? Meow Cat, was that you speaking?
That's correct.
Okay. Yeah. So, and I can tell in the room who understands it, because you know how else I can tell. Besides you guys posting charts, and when you guys comment about RSI and MACDs, I immediately know you're not using volume profile.
It's so correct.
Because once
Blindly
you
trading
understand,
without it.
I'm sorry.
Without it, you're blindly trading.
I would agree with that. So once you understand the volume profile, and let's say market profile, which hopefully I would say when I started this room and teaching people, I started with volume because it's easier to understand than market profile, in my opinion. We've covered volume profile for a while, and I would say majority of the room, I would say 70% knows how to trade volume profile. Then we added market profile, and it took us, I would say, about 3 months so far to get people up to speed. They see the letters and they freak out. And it took people some time, and now people are getting more comfortable. I hear comments on live, single prints. I see this period. I see IBABs. But you guys are starting to kind of put it together, right? And it's not an easy task, right? It's almost two different languages. One is based on time, one is based on volume and price, and they have different anatomy, right? They use different language, and typically I would say that they have the same message between the two. The same principles apply, right? The only thing the market profile does, the way they structure the data, gives you a little bit more information regarding the day or the time that you're trading in, whether it's framing down or up, whether you have single prints, other time frame buyers, sellers coming in. You can still do initial balance. We've always done initial balance in volume profile, but now you can use letters A and B to, instead of the 30-minute candles, right? 2 30-minute candles. Those are the different nuances, right, that it provides, but it does give you a little bit more ammo on the market generated information. Volume profile is still, I would say, my baby. I use volume profile a lot, and you guys see me charting with, FVP, fixed volume profiles, a lot when I'm looking at data. See where are the bounces, where did they pop from, or where was the balance to imbalance, where's the POC, value areas. All of that matters. Like on Friday, I mentioned that we were at the value area high, that it wasn't a bad short, and shortly after that was 18 points. Right? We tried multiple times, you're auctioning and you fail, and that's how I use volume profile, and we'll go into details, but it's the same simple concepts that you can apply in market profile. It's just that it gives you more information at that time that you can combine with volume to make a conclusion for your trade. Okay. So what is volume profile? It's similar to what you guys have seen before on the bottom, right? Where you have the candle and the volume, but this one tells you how much volume at that price did we do? How many contracts exchanged at that level? And you might be like, okay, well, who cares? Well, you should, because if you exchanged 1 million contracts at price of $10 and now we went to $15, well, that $10 was the point of accumulation for them. And if you're to come back to that level, most likely they're going to defend that position, right? The components of volume profile. So the point of control, or POC, right, is where the highest amount of volume has been traded. If you're selling a product at a price of $10 and you have the highest number of sales at $10, that would be the fairest price you have for that product. If you increase the price to, let's say, $12 and your sales go down, what is the market telling you?
Price is too high.
It's too high.
It's too high.
And when you think about volume profile, all the volume profile does, it tells you those levels using, I would say the bell curve, the standard deviations, a little bit of statistics. Where is it? If we are trading happily, I'm just going to go next slide. If we are trading happily within the first standard deviation of 68.2%, that's what we change it to. Value area high is just the top of that skew on the first standard deviation. The bottom is the value area low. This is where short-term traders live, right? They trade in between the value, and the big boys are usually selling from above or buying from below. Like, I guess in this example, they did the same.
Yeah.
They bought, they sold, and then look, in between is me and you guys, unless you're a different type of trader. In the POC is where they were happiest, right? So if you fall back inside the value, where are you most likely to go to? It's the POC. And we have the setups in the PowerPoint. If you guys remember the slide, when you have a range and then you have the value, when you reclaim the value, you're targeting the POC as a first target. Once you pop that, you're going to the value area high as a second target.
Yeah.
So your value areas where, it defaults to 70%. I changed mine 68, where 68% of the volume for that day where it traded. It's important to know that, because if 68% of the volume is here, that means what? The other, 32% is above or below. So naturally, the price is going to navigate towards the fair price or equilibrium anytime it gets back inside that value, the 68%. Okay. When you go from the bell curve aspect, right, and understanding this, if you haven't taken any statistics, everything usually falls in within the first standard deviation. The other two become anomalies, right? When you're stepping out to 2 sigma, 3 sigma, you're already reaching for the stars, and it's too far away from the equilibrium, and most likely the price will eventually navigate towards that price where it was fair and where a lot of volume existed already. Because if there's not a lot of liquidity on the outside of the 68%, is there a lot of reasons to trade there?
No.
Oh, it's going to be quick and dirty. They execute the orders that hits, whether they print single prints or not. And then eventually the goal is going to be to go to the mean or higher, especially if they bought it at the lower prices. So the cycle repeats. They bought it below the value. They're going to sell it above the value. Buy low, sell high, right? That's the concept in the value area. You have the concept of high volume nodes and the low volume nodes, right? High volume nodes is where there's a lot of participation, a lot of, I would say, a lot of trades happen, right? They are true support and resistance. If we trade that a lot, I would say, when you have a high volume node and then the price comes back to it, you can, depending if it's a long or short, if you broke out of a, zone, let's say consolidation zone, you popped higher, finding those high volume nodes for a retest is really good.
Yeah, support and resistance.
4140 that we had the bounce from was a really high volume node. It was a 3-year POC, which makes it a high volume node. Once we came back to it, you got 700 points from it. A low volume node, it becomes a little tricky, right? Because a lot of people treat it, low volume node, as soon as you enter in there, it's going to dump. Somewhere in there is also an aggressive buyer or seller that they initiated that imbalance. And typically, when I say we're going to protect that low skinny belly, right? They're sitting there to make sure that the price doesn't fall inside that low value area, because there won't be any trading that occurs. The price is just gonna, like we had on Friday. On Thursday's watch list, we said if it breaks 27, then most likely it's gonna hit 03.
So they usually protect it pretty good too.
And they will protect it, but if it falls inside,
Yep.
there's not much volume or participation to stop it until it goes to the next volume node.
Yeah.
4703 was our, I believe, a POC or a VPOC level that we had, and it was also the end of the single prints on the market profile.
Yeah, it was. Sure.
We lost 27, and we lost at ETH, right? And we had two scenarios: either we were going to bounce there, or it was that they were going to go to 40. What is it? 40. No, I don't even know what it was. 46.96.
46.81 or
No, it was
So-
96. There was a VPOC there on 97 that they were going to trap the, the longs,
Oh yeah.
the shorts below it, and then bounce from there. But they elected from 47, and I mean they ran it like almost 50 points, which we said if they comes here that they can go to the PD value area high. And remember, they cracked that 50, was it 46.75 on ES? Then they cleared 54. The
Yep.
only other level that was left was 66. And they tapped 66, which was the PD value area high. And from there, they auctioned lower, right? And they closed right at the spike base.
Well, they tapped 60, Shorty.
Oh, sure. 60. They typed that, whatever, it was 60, 66.
Yeah.
They tapped it, and that was a PD value area high. I know they
Yeah.
completed the 80% rule perfectly.
Oh
And
yeah.
they continued lower, and they found it in the middle somewhere. On the volume profile, whether you're using, it really doesn't matter the platform you're using. Most of these platforms now offer same features, right? Fixed range, I like TradingView because it does have the flexibility of fixed range, visible, session volume is day to day. And then PVP we use to find whether it's weekly, monthly, quarterly, or yearly profiles, we use PVP. Session volume profiles, we use a day to day, right? Just to see, are we progressing? Is the auction still healthy trend? Is it in balance? Are the value areas shifting or POC? We use that to establish the bias. Then the visible range, some of you guys see that on my quant tower, right? When I trade, I have the either volume profile using volume, or sometimes I have the delta on the right to see where's the aggression for cumulative, whether it's all-time visible range or if it's 10 days or 7 days weekly, you can adjust that visible range as well, whatever is visible on your screen. And then you have the fixed range. This is used by me or members in here, but we have a consolidation and then you have an imbalance. We grab the low and the high of that swing and we look for the volume nodes where they can come for a retest. And typically, when you find a fixed range, you want to play, I would say, unless you're in a balance more than 2 days, I like to use fixed range to find where are the buyers or sellers on that imbalance move. If they reaccumulated somewhere, like 4,700 was a reaccumulation of buyers. If you guys go back on your visible range profile, they were there, they are sitting. And I'll stop here for a second and show you guys. Let's see. Let's hide this. So,
And you're right, they did tap 66, but that was on Thursday, Shorty.
yeah. So
Yeah.
now if you guys look, right, we had that October low, whatever this is, unadjusted, 41.21. We tapped that. So if I was to take this fixed volume profile, and you guys can find this here, fixed range volume profile, I think you can go under indicators, technicals, profiles, and then there's also here fixed range volume profile. If you click this little favorite button here, it'll give it to you in the favorites, like here, and then you can just click it easily. And so if I was to select this low to, let's say, this high, I'm able to see where all the volume nodes are, right? So now if you guys think about this, where did we bounce, right? On this level here. Well, we bounced somewhere around this level, which happens to be, the last piece of the node. Electronic. So if you look at this, there is a volume node that's stopping there. And then look at this one here. This was a tiny one on the 4,700. And we talked about this, right? So if you look at it and you zoom in a little bit, look at this. This tiny little guy here was enough that it created, right, a tiny little volume node. And this is the bounce that came there. Is this a typical node that offers a drastic bounce? I would say it can, right? And it did. But where would you expect the buying to be set? Is if you look at this, it's right here. If we were to come to this level, 45.64, and I typically look at these high volume nodes and I kind of scan, okay, well, where is the area where they can go? And this would be something that I look for. So now, if we are to lose this 4,700, what would I expect? I would expect us to go to 45.64. A lot of people that are afraid to short here, where is the retail most likely going to short?
At the bottom one.
Yeah, 45.64 level.
they're gonna come here and they're gonna start shorting right here. And typically, this is where I start
Buying.
buying.
Yeah, because that's retest.
As they're selling here, I'm gonna buy. And the people that shorted here, they're most likely gonna cover at this point, right?
Yep.
As they're covering, that means you're covering to buy. So they're helping with the delta positivity. They're buying. The dealers also here are selling to the buyers, and these people that are, short selling, they will want to sell, sure, sell, but majority are going to buy to defend the position from here because this is our balance. Market goes from balance to markup to another balance, so whether it's a reversal or a continuation, right? And you can look at that on daily, right? And you would see it pretty nicely. So if you think about this, we had the nice 4140 level, and I would say, let's see, 21. Even if you grab from COVID lows, here's your bounce. It came back, it hit perfectly. The value area high was, offering some resistance here, 46.5, and then they popped higher. So now if you look at the daily, you can see where the consolidation happened. And, for a lot of newer people, this is where the struggle might be. How do you know where we consolidated? I mean, you can literally hide the candles here. Just give me the point where to start, and I don't care about anything else. Start your volume profile here, and I would end it here. And you can hide this.
Yeah, you can see it right there.
If I start this now from here to here,
Wow.
this is all I care for, right? I know that this is going to be the level that I'm interested in. And as the price comes to this level, I meant to take this line, this would offer some support. And this profile is not, I would say, not the healthiest buying profile. The value is way below at 4,600, 4,608 is a 3-year value area high. So there's a lot happening in this area as we come to it, right? And you have to change your behavior and how you buy and sell. A lot of people like to go with the flow, and that you become more of a market participant, aggressive market buyer and seller. Instead, when you guys think about that bid that we had, the chart, right, where we had the bid and the ask, right, you can use that to become one of those guys on a longer time frame, right? Whether it's L2 that shows you up on 10 levels or L3, you'll be able to see it, right? Where are you sitting, right? I would expect buyers to come in here and defend the position, right? Right now, it's just a negotiating process, what we're going to do. They still have a little bit of volume here, but it's not necessarily a lot. This level here will be a decent buy level for a long, let's say, call or whatever you might consider. It would be a great level, just like this one was here.
Is that 45.50 or 45.60?
It's 64. Yeah.
64. Yeah. Okay. Got it.
And that's how I would use, the volume profile and then the visible range that you guys are seeing here. So you can go under indicators, technicals, profiles, and there's something called visible range volume profile. I already have it here customized and you guys see it now, right? If I was to, I'm zoomed out here on daily, right? You see where the volume is. If I include, I'm including in this visible range profile, let me just delete this. I'm including, let's go on the weekly so we can add more data. So right now I'm including data all the way from December 17th. And this thing on the right, if you guys can see it, is producing volume profile based on what's on the screen. And you see now, the POC in this case, the mean, the fair price is sitting at 2,700. So at this point, if you're a bull, you would be a new bull, right? You would be considered new money and you need to kind of defend these levels. But this, ever since we left here in March 20th, right, we haven't really been back to this level here. And then when you go 2008 to now, you're sitting at 1,300 and we haven't been to that mean ever since. Okay. And some people say, well, consolidations can't happen long periods. Well, sure. Like if you look at this data, for instance, right here, this is where we consolidated for a very long period of time. if this was the consolidation of, you know, from 97 all the way to here, maybe this is the result, right? Can this not be the markup? Well,
Yeah.
if this is the markup, and now we are sitting right here,
Yep.
and
Doing it again.
we accepted the prices, let's say we didn't accept the prices higher here, even if you use Wyckoff or any other theories, there's a high chance you're going to be coming back to the mean again of this consolidation, right? So
Yeah.
let's say you get back inside and you draw this, and that was your 41, whatever, 40 level. Now you can dissect this chart a little bit, right? So this was our high right here. You're back inside this range. You're not able to break it, right? And what we learned earlier on this break, you don't want to be this guy right here. You see this little fella that bought
Mm-hmm.
right here with the wick? You don't want to be the price discovery. If they're going to crack out of this, right, first we need to see the volume, right? We need to see the volume, the breakout right here. And I would say the volume, not so crazy on the breakout. So we need to see this level broken down with a lot of volume. And then when they come back to it, this is where it would be a really good long for potentially long-term timeframes. Let them explore prices higher. And when they come back to this level of the breakout balance, then it would be a potential for a long. But now on a long time frame, when I analyze this, right, this is my value area high. This is my value area low. I would say what, 3 years or so. If you're able to, if you were to lose this 46, let's say 14, if that's the level here. Let me make sure. Yep, somewhere around that. I thought it was 46.08. Yeah, that sounds much better. If you're to lose this level, let's say you get back inside, the principle of volume profile would say what?
You're gonna visit the park at least.
If you are not accepting the prices to be higher, where do the advantageous, where do the long-term people buy it?
At the point of control?
There's a point of control, which is our first target, right? If you're
That's
short,
very
you want to be short below 46.06, called 80% rule, and you can trim your position at POC. You want to close it here. If we are to come back here, right, to the value area low, you would have buyers here. There would be instant buyers here. And if these prices were, let's say, to go lower here, and they crack below this range low that was set here, then they reclaim it. Oh my God, this can quickly go to all-time highs. And that happens a lot. And it happens on 5 minutes, and it happens on every different time frame that you guys potentially trade on. Right? So if you think about it, if this was our range, let's say you see this low here, I think this was the open. No. Let's say this low here that was set. You guys see it? They came back here to the low. And then what did they do to the poor people that shorted? Did they crack this low? Did they make a lower low?
Trap.
Put in a lower low.
Trap shorters.
They trapped all the shorts and then they popped immediately. And I would say if you were to grab this area here, they went right to the POC of that sell-off there. And just so you know, I don't ever count this level as a single level. This would be something that I would do all the time. And it typically is a couple of points, right? Left or right. And you see here, they came, I would say, a few points away from that level that we had. And that's just using, I guess, 5-minute candles here. And here's your POC. And look, they came very close to that level for potential sell-off, right? So where's the open? Let me go to RTH. I don't mess with this. Okay, so here's Thursday. Where's Friday? Why is it not giving me a damn line on Friday? Okay. Well, maybe it doesn't want to. I don't know why, but let's see. Friday open is, well, I guess that's it. About 5 minutes. So this is where we opened, right? And this was our open low here. The blue lines are open low. We spent some time below it, right? That was the low. They cracked below. Then they went below and they consolidated again, right? And then they popped out of it. Was it aggressive pop from here to here? In my book, I would say that's not aggressive. But why do I say that?
It didn't make a higher high.
Thank you. There was a supply here that we, so Texas Raj, if you look at this, this was a supply. This was a consolidation again, and look what happened. We consolidated, you know, we sold off. And on smaller time frames, you could make a case for more consolidations, but the more you go lower time frames, the less probable your setups are. So in 5 minutes, you consolidated, you sold off. So if I was to look at this sell-off candle from the top, let's say to this candle here, where's the POC? Is it right here? Where did we sell off again? Again, you sold off from here. And then similar concept, right? If you were to grab this to here, and there goes that POC. I think that's the one we had earlier. You came very close, right? You would draw a little box around. And is anyone challenged when I say draw a box around this? POC, is there anyone, it's more subjective, but the way I look at it, I look for symmetry around it. I look to see where's the kind of cliff fall off. You see clearly there's a cliff here, right? Shift in volume.
Yeah, when you draw the box, it's easier to see.
And when I do this, to me, I look, you know, it's, you know, 2.5 above, 2.5 below. I look for symmetry, and that, I don't know, to me, the brain just does it automatically. I don't really think about it that much. And now this will be the zone I have to reclaim, right? So if I was to draw an FVP on the day, on Friday, right? Now you see the liquidity areas of the volume. I see that there's a high volume node here, right? There's one on the top where we spent quite a bit of time in volume. Then there's the POC. We went inside for the day. Now think about this in terms of value and price. Who cares about buying and selling? Think about the value. So if you think about value, does anyone want to take a stab what happened on Friday? Just so you kind of can get in the habit of analyzing. Give you 2 days, make your life easier. Okay, let me make sure that this is not extended. Does anyone want to, I'll help you. If you get stuck, I'll help you here. 2 days, who wants to analyze?
We attempted to find value higher, then we didn't accept it, and we went back down into a downtrend.
Okay.
Is that right?
That is very good. Anyone want to add more points?
Yeah, we ended up today with under the POC and under the value area. So we closed the day under POC, under value area low, which leads to believe that the next day we're going to be opening
Okay.
under the POC.
All right, good. Anyone else? Any other points? There's a few more I'm missing. Anyone else? Don't make me pick on people.
You know, we spiked there at the, not spike, but
Don't worry about spikes. Just worry about what you're seeing, value and profile.
Okay.
We're in a downtrend.
Okay.
Is the POC shifting down?
POC and value area highs are clearly shifting down. They had an overlap between Wednesday and Thursday. That's correct. Then This is where I pay attention a lot to the volume nodes, right? So that's why, when I put this stuff in here, they have a meaning to why, right? So if you think about this profile, let's say where we started a sell-off, right? We accumulated here, right? Now I would say we hit this POC and then you had this, call it gap down, right? You had the gap down, and then from here, this level is going to be crucial for any upward action, 47.88. This is the one that caused majority of the pain for the I would say longs. So now if you take a look at it, right, they accumulated here in this zone here, right? They accumulated, and this one failed to break that POC of sell-off. Now you want to look at it and see anytime they come to this level, how do we react to it? Well, from this high volume node on the bottom, this is a bottom distribution of this day, right? This is the bottom high volume node. 1 second.
If you need anything, I'm in the bathtub.
Thanks, man. Appreciate the info.
Are you talking about Friday?
For some soap.
Shorty, you talking about last Friday, the 29th?
Sure, Dave. Hope you're prepared that you don't have to ask him questions on what you're teaching us.
So it's good when you have a kid like that, man.
Very kind.
Yeah, he's a really good kid. So now if you look at the distributions, right, and you have to pay attention to the high volume nodes and how we are reacting to them. So if you look here, we bounce from here and we, somebody mentioned earlier, we failed to clear higher high. In this case, we failed, then they gapped down. And look now, the same high volume node here, we came for the retest the next day, we failed. Then you had this day produced a high volume node, right? I would say somewhere, I'm just gonna highlight it, maybe different color. So you can hear orange. And look what happened. On this, I would say double distribution day, you had 1, you had 2. They closed, where did they close? They closed way below the POC. They came back to this double distribution. They reclaimed the POC, went higher, and then they went above, and then they failed. This is not a bad short. 9 out of 10 times it's going to pay when you have a double distribution like this. They accepted the price, but they accepted it also below this distribution of this day, right? They went lower to that. And then if you think about this, if this was our value area low, what is this, Wednesday? For Wednesday, the value area low, they came back and they're like, oh man, we do find some value here. They found the value here, they popped it, but then they lost it. They came back to it. But what happened then? They extended that value. They extended the value lower. Why do we go lower?
Let's fix that poor structure.
Why do we keep selling?
We keep
More
selling
sellers than
because
buyers.
Shut off sellers.
there's no value at the top.
Well, there's no
No,
value,
shut up sellers.
You want to shut off the sellers, guys.
Yeah.
Very first thing I mentioned here. You have to go back to it. You're selling to shut off the selling. You want to find buyers. So now we had some buyers, and I would say we are familiar with this 27 level just because the homework we did prior. This was what level here? On Thursday, what was it?
PDL.
Sure. It was a
Previous
PDL,
week value area low.
It was previous week value area low, but it also happened to be that there were single prints involved on TPO. So we are aware of the levels. The key levels were identified. They came back. We established this, right? And then during the RTH session here on Friday, like they cracked the 27, and then we had, I think it was 03 that we had. No, 2. I think we were here somewhere.
Yeah, 02.
Let's just draw a level here. We anticipate a bounce at the 03 level because of the FVP high volume node. But when you go back day to day, everything checked out, but there was a slowdown in the auction. There was a major slowdown in the auction that I think we even brought it up on Thursday. Do you guys remember when I asked you guys that? Well, CK brought it up. Remember, he said that there's a slowing down in the auction. I'm not sure if CK is on. But we said, hey, the value area lows and highs are shifting, but then it started kind of over.
Yeah, I remember that.
And auctions, if they start slowing down, just like we talked about, when you sell peanut butter, right? If you auction so higher, you're not going to have participants at those levels. you're going to have to drag that price lower to bring in participation from the other side. You need the opposition to step in to start buying or selling, depending on where you are. And in this case, this is a clear sign. Whenever you see values overlapping, POC is getting tighter. And before, I don't know if you guys remember, at one point, I actually, I thought it was SVP for a second. So here, you see the overlap is happening, and you can measure the POC spread between them, right? You see that there's 37 points in between this one. It's slowing down a little bit. And then you see here, not much, right? So what you can expect, let's say come Monday, what would you guys expect to see here? How would you play this now that you see market slowing down, the auction shifted down, the value areas are overlapping, we came to a support, you respected the HVNs, right? Some major HVNs that you sold off from, you respected. What about this HVN here? Do you guys think this one might play a role at all come Monday?
Could be a bounce on.
Yes.
Yeah.
I would definitely watch this one, right, to see how they react to it at 47.32. Any other ones you guys would watch? I gotta shift this. My brain can't do this.
I would watch for where it bounced at the bottom there at 02.
Crap. Okay. What's 02?
Yep.
This one, I don't see a volume node there. There's definitely not a volume node at the bottom there.
At the PD value area low. If I was gonna play, I would wait for it for the break of PD value area low, retest, and then take a short.
Yeah, we're gonna gap up tomorrow.
Okay. In that case, then I would wait for it to break POC, break above PD value area high, retest, and go high.
What type of profile is this?
It's a D shape with an expanded, we call that, with an expanded, I forget the word.
Okay.
E shape with a pull high, right?
I don't know. It looks like a
That's definitely a poor high.
triple distribution.
Oh, yeah.
Triple distribution. I don't know.
I would say there's excess here on the bottom without looking on market profile, just
Yeah.
because of how skinny this is on the bottom. I'm sure there's excess here. Also,
Shorty, would you look at something for me?
not right now. Not right now. Let me finish this.
It's on this though, after you finish.
Yep. Bean, when we were trading on Friday, we mentioned that it would be really good for them to go to the POC. Do you recall that when we were trading NQ? We said it would be.
Yeah. I said it'd be really nice if it does that. Yeah, I was already done trading, but yeah.
Mr. Bean said
and then it
that,
ran.
And then it ran. We went below the value on NQ, and then we fucking ran. We ran like 70 points, if you recall. And Bean was like, well, maybe they will do it. Well, little did he say that. They came back here, right? And you look at the price action, 930, we put in a higher low inside the value area. If you're putting in the higher low inside the value area low, what does that tell you in terms of price and acceptance of that price? I'm not letting it drop to a certain level, and I'm already buying.
Higher.
That means there's a little bit of
the wicks we had on the 5-minute was ridiculous.
Oh, yeah,
on the 5-minute candles, you had two nice long wicks.
Right here.
Yep.
And we were long somewhere around here. I forgot the level where we were long, but we were long at some point here. Regardless, it's telling you if this is our value area low, and typically on 30 minutes, it's going to give you a more accurate level, and it's not coming close to it, and then they start buying to the reversion to the mean. What does that tell you in terms of value and participation of buyers?
Means they want it.
Starting to go back up.
And they want it now. So on Monday, when you look at this, and we're on ETH here on volume profile, on market profile, we use RTH. If we're, you're right at the POC.
Mm-hmm.
Right? On NQ, you're right at the POC. ES, you're right at the POC. We can open tomorrow, most likely we're gonna have a gap up. If we gap up and they come back to this POC, what do you think happens?
Oh yeah. Take it
We-
long.
Yeah, it's
I
gonna be
got a question on this one, Shorty.
sure.
So we have single prints back from December 13th, right?
Mhm.
That made a big, huge skinny belly on TPO, looking only at RTH.
Mhm.
And if we take them over to today, right? If we look at yesterday or Friday, we do not have, we have just a single square. We do not have a tail. Yet we do have past single prints from the December 13th. You know
On
what I'm
buying?
saying? Yeah,
That's what I was gonna
yeah,
say.
on the
If you
bottom.
zoom
On the
out- if
bottom,
you-
we don't have a nice long tail unless you're looking at what we're picking up from December 13th. And I guess what I'm trying to ask is that 13th in TPOs still hold weight?
I would say yes.
Yes.
Without-
That's what I was
without
gonna say.
looking at-
Zoom out.
Hold on one
We're
second.
at a huge support level. Where if you zoom out, there we go. That's what I was trying to say.
Let's see which ones are you after.
Yeah,
Shorty,
just
this
gotta
is
you-
ETH.
yeah, you got to go RTH on this one.
Yeah, I have to shift a little bit. You guys switching to market profile. Let it load. Give it a second. I was just covering volume.
That
profile. We'll switch here. Are you guys talking about this day or this day here? Are you talking about the FMO?
It was the 13th. Yeah, the 13th, whatever. That right, probably. Let's see here.
That's right here. Your single prints are here, and then obviously all the way to the bottom here.
Yeah.
Okay. And look
But
where you
then
are.
yesterday's was this was actually in the middle when you're looking at RTH. You had a POC below it, so it was actually not a tail.
For me, it's
yes.
I'm talking December 13th. RTH on ES.
Oh, I'm sorry. I'm on NQ, man. You're
Sorry. Yeah.
Curveballs.
Sorry.
Yeah, you're sending me a bunch of curveballs now. Hold on.
Gotta watch out for Mr. Bean.
I see that. All right, let's see if it refreshed. 13 is, this is the 13th right here. Okay. This was
Go ahead.
the PX repoc.
Right. So above it, you see all the green single prints you got up there?
Yep.
That huge band there. Now you've used some of those up. So if you highlight that zone or whatever,
Yep,
then we go over to the right. We go over to the right. We still got a whole bunch of that left below, but you only have a single. I'm only showing like a single.
Where do you have it now? I'm sorry.
Where?
You said we have a bunch of it unused. Where is it?
I would say it goes all the way down as low as 4708 75.
I'm not following. We cleaned up all of this in ETH.
Okay, that was my question because I thought we looked for only for RTH. So
No,
ETH
we did.
we do
Look at
take.
yeah, so look at this now. Just go back.
No. I understand.
Yeah.
We trade. If I look at what we did after hours, but I wasn't sure with TPO if we're just supposed to be looking at
I
RTH.
typically look at the cash session, but it's a little bit subjective, right? When you
Okay.
have, when you have the Globex, right? I don't use for TPO. I don't use Globex because the liquidity is just not there. But when you look at this candle here that came in,
You categorize that as being cleaned up. That's what was the thing. I wasn't sure
it's
if that would be
subjective
categorized or
because
not.
here's your volume bar for this session right here at 8:30, and I look at the volume for the remainder of that Globex.
Mm-hmm.
That's 10 times more volume.
Yeah, we had a lot
Easy
of volume
10
there.
times. And then I look at, I just have to look at, just subjectively. You look at this candle here, and the rule that I mentioned to you guys is the wick to the body, and you play that. And what happened here?
Stopping volume.
Stopping
Wow.
volume. This fella did not. He was not interested, guys, in price going below his buying at all. The price came here, and I have struggled with this little thing here on the right. And now you see here, wick to the body, and look where it came. He's like, oh no, we don't want that. And then they bounced right higher. So yes, if that answers your question, it's subjective. If this volume here, let's say this volume was like this volume here, yeah, I wouldn't care for it. But these people are experts. They came in at 8:30 when you guys can't trade the options.
Yeah.
And they did it perfectly at 4,700, and then they ran it, 50 points, 60 points, right? And then they closed wherever they closed.
So now, if we look at this from the standpoint of ETH, we've got a nice little tail on this day. But if I go RTH, we don't.
That's correct. I would still consider the ETH positioning on it just because we saw them drive.
Yeah, because of the volume that came through. Okay.
Yeah,
all right. Cool. Thank you.
He came in closer to the open than it did. Like if it was a midnight guy, it seems like somebody from Burnside World is buying or selling.
Yeah, Burnside.
Yeah.
Always my fault.
Yeah.
Never Burnside is all your fault.
This
We
was
would-
definitely
we-
somebody from Europe doing
We would have got away with it if it weren't for metal.
Damn it, man. Not even Cubans for
Very
that
good.
guy.
They make, I don't want my charts look like dumpsties with fucking colorful parrots. Okay. So now that we shifted to market profile, let me go back a little bit to volume profile. Hopefully that answered a question for two of you at least. The SVP. On SVP, I definitely look at, for that reason, I look at SVP. Now I guess you answered this. Why do I look at ETH on volume profile? Because of people like him. Does that make sense? Just because it's not RTH, but he handed out quite a bit of volume here, and he created a node.
Yeah.
Yeah.
He created a value node right here, and that's exactly where 330 they came back and bounced it and spiked it back inside to POC. So this guy is pretty present there. So if you're able to crack below this guy, let's say tomorrow, if you're able to absorb him, could I short this 18 to 7 to this level?
Sure.
Yeah.
This would be a pretty good
Of
short.
course.
That means we absorbed this guy that was buying right before open on US. But if we're, let's say, on ES tomorrow, let's say we open above this POC, the chances of us hitting this level right here, 46, are fairly high. So if you crack above 37, let's say, and you come back for a retest, you can catch 10 points fairly easy. Why would this level be important to me? Like exactly, let me make sure why this level here? I'm giving you a clue. Think about
POC is at the value area high.
what was
The
once
overlapping.
what was once value area low became the next day's fair price. What was that day's fair price became the extreme value area high.
Value
of the day.
Right.
Does that
You
make
crack
sense?
that,
Well,
yeah, that would be a break of structure. I mean, change of character.
yeah, so if you're able to, let's say you crack this level here of 46, the next level most likely you're headed to, just look at the, look at what the chart's telling you. You have the
The top.
POC at 54, which I would be aware of, right? And then you look at the value area highs. So you had the value area, it wasn't really respected here, it was at 57. Then you have somewhere around, can't see these damn levels too well, 64. That would be the targets that you're playing. So now if I'm looking just trading volume profile, personally to me, this gives me a clear picture. If it doesn't, this is where you guys ask questions. So we cannot afford to lose. I would say my initial long would be, I wouldn't wait for this level to hit again. Why not? Why would I expect buyers to show up at this zone first?
Because pre-market, you had such a volume coming in, it looks like they're changing direction
Okay, good. Anyone
based on
else?
that spike.
And also, it's a high volume node, right?
Higher
Okay,
lows.
good. What about like, I know you guys like trend lines. What about higher low? If I was to bounce here, that would be what? I would break this trend line.
break
I would
trend
create
lines.
fear on people, right? Then people will start shorting. Can they still break this trend line and do this bounce?
Yep.
This would be a
Yep.
really good trap. They would trap the people here, but this node here, I promised you, is going to play a big role tomorrow, right here in
Yeah,
the middle,
yeah,
24.5.
Yeah.
They're going to
yeah.
most likely, if they auction pre-market 24.5, let's say tonight at 6, I would expect them to come back here, and guess I will be there.
They might overlap a little bit and then go higher.
Yeah, they're gonna hit this level here. If they're to come back to test this level again, and
Mhm.
they come in with force, I would not trust this level as much as I would trust this one to buy.
Of course, yeah.
I want the eager buyer, just like they were here, to buy sooner. I don't want them to wait for this guy here, because this guy showed up once already.
Yeah, if they go down there, they might go lower.
They're gonna crack it. They're gonna search for value lower, and that's okay if
Yeah.
they search, but I would prefer them to hold this.
Sure.
Right now, they're just creating liquidity for the move. And for me, the auction's slowing down. Just like when we were looking at this move, I issued a warning in the room that the auction was slowing down here. And I also mentioned that the same exact move happened last time when we were at all-time highs because of the December value. Okay.
On the daily, we had also hit the clouds and the bottom of the cloud that we had broken through the top all the way to the bottom of the cloud of the daily, and we had gotten a full send up on the 30-minute, I think.
Shorty,
on NQ.
can you switch to NQ? I think it looks pretty much the same, but just to make
It
sure
does. Yep.
it does, right?
Yep. What did I do here? There it is. It has the same concept, right?
Yeah,
So you're
yeah.
coming back, you have two VPOCs here, value area low. This level here is really, really important. 4 and 426. I mean, and you look at, okay, just don't be blind, right? If you're looking here, remember what I said about low volume nodes and skinny belly protection? We
Mhm.
are protecting the crap out of this because if they can't, let's say we put in a lower low here, lose 32, you have another, I would say 300 points. I would definitely not short anywhere near here.
Oh yeah, if you lose the PDL, yeah.
Yeah, if you lose this PDL, guys, there's a quick drop, and they could have some massive news come out here within the next few days. Their job is to get you out of the positions and get you to, feel something.
You can go from there to December Valley area low and nothing.
And now you look, and if you do the same thing we did on ES, if you're a NQ trader, let me go on 8 hours just to get a little bit less candles.
From 33 to 83.
If you go here,
333.
and I just go to this high here, look. For this run up here that we had, the POC sitting somewhere around, what is this? 74. But I gotta change these colors a little bit. So you have this here, and then the volume node really starts somewhere around here. What is this? Can't tell. 118. So you're gonna slow down a little bit up here, and I wouldn't be shocked, let's say, by Tuesday that we have this drop, and then the rest of the week we have a really good recovery, right? So that was just, looking on basically on the FVP, and then we use previous levels, right? Like what we talked about in the PowerPoint, right? We have different methods to look at the volume profile. So we look at the weekly, the dailies. I showed you guys on the daily now. I showed you FVP. Right now, what you're seeing here, this is our weekly profile. So each profile has a week worth of data. Now, when you look at this on NQ, there should be things that you notice slowly as you use it more immediately. Right. If I look at this right now, the value area low of this level here is sitting, where is it? 16, let's call it 16.6.
600.
Yeah. 16.6 is the, the value area low of this level, which is close by to this value area high. Not something you want to trade in between here. Like between here, it's going to be a lot of chop. And if you look at these candles here, you don't see candles, you just see wicks here. So it's going to be a dangerous zone to trade and initiate a lot of positions. You will need them to break this for you. So this area here, whoever wins this right now, if bulls reclaim this area above here, all good for them. Most likely where they're headed is going to be somewhere at the top to retest this. All right, they have some volume nodes, but ultimately they're going to drive and they short squeeze right out of this. If they are not able to support this, let's say from this low, let's say to this high, it's going to be, where did it go? Can't see these candles anymore. Okay, and you see this level now here, right? So if this was the buying point for them, if they're able to reclaim this here, the momentum will shift for the bulls on the longer run. They can then expect to hit this level of 17. That's about 400 points away. So all they have to do is reclaim this little green zone that they have, and they have a run again, because the poor structure is here, right? They're liquidated. There's not a lot of structure, right? So they can fix this. They can go back to it and they can create value for themselves here. So they had the balance, imbalance, and now it would be creating the value much higher. So they have to reclaim, and they held this weekly value area low here, 431, pretty nicely. If they can go back to, what is this, 561, and auction higher on the prior weekly POC, that would be good for them. Breaking this level, and especially this value area high, and reclaiming this value area low, sends, it would be a massive short cover rally to here. This could be a 2-day thing here. Okay. So right now, when you look at it, we are in balance on the weekly, right? We're right inside the value area low. If we lose this value area low to the downside, where's the next value that we are going to be searching?
16,100.
The balance area there on the left.
Yeah, down there.
This is the last one that we had, right? So most likely they're going to come back and see, are we accepting these prices higher? You guys remember the screenshot or the PowerPoint slide? We're anticipating them to visit this, right? If they come to this level, it's going to be pivotal for them to defend this. If they fail to hold this and they do something like this, then we know the POC somewhere around here. They get a bounce, and ultimately they will test the value area low of this. So then I would take this previous balance that they had, and they have it at 15,884. And they will potentially just do like this, and eventually they will test the value area low of this at 15.8 and the bottom here. But this would be the zone that they're targeting. So the weekly so far, when you look at just the weekly candles, along with the profiles, weekly is making lower highs and definitely lower lows, correct? Compared to the candle prior. So we are framing down on the weeklies. On the dailies, I would say you're still framing down on the weeklies, and the framing would stop where? Well, if there, I would probably, you can count this right here, or the one above. I'll most likely count this one, 88. If they're able to crack this, right, then the daily framing down stops. So far, the weekly and daily are framing down. So the pressure is now on the buyers. Are they going to show up here and stop it, or are we going to break this lower low? Let's say we break this. Most likely, you're going to come back to the POC of this zone here. Does that make sense?
Yeah.
Everything
Yes.
is more bearish at the moment, and it's in bulls' hands. What are they going to do? And I would say, crack this, it's going to be a quick drop. They have a high potential to drop this really, really quickly to the top of this range here. Okay, so weekly's imbalanced but framing down. And then you can also check the monthly, even though we're still early in January.
Shorty, your previous week value area low, you have it at 430. 433.
Yeah, close enough.
Got it.
And then you see here for the month, right? If you guys look at the monthlies, let me go on 4 hours. This is your value area low on NQ, man. My mouse keeps stopping here. If you guys look at it, this is your December value area low here. We are still in balance on, well, I would say on the monthlies, right? And if you look at the prior month, which is November, look at the value area low here. Is this the area that you're willing to short? Me personally, not really. This is where they can do a lot of damage to people, and that's why.
Yeah, I remember you saying that before.
This is where they set the traps, and I would want to be aware where this November value area high is, right? Because if they shift and pretend that we want to search the value area lower, it would mean the acceptance on November value area. Because if this is my acceptance here, and they bounce from here, that would be a good spot, and then they can continue trading and building value higher. They can go in between here and build value. Does that make sense?
Yep.
Yeah, I know you asked the other day in the chat. I read it. I was going to cover it today. Why I mark November value area high. That's one of the reasons, right? I want to be especially aware if we popped like we did here. When you come back, are you defending this price to go higher? And this can be used as a perfect trap here. A few weeks prior, I would say before the year end, we had a watch list. I don't know what day it was, but I warned you guys that this can set up for a lot of selling, right? We had November, and then you see the December, we are not able to peak above on NQ. On ES, it looks worse. You'll see on ES. On ES, I gave you the warning because we went above the value here, and look, we cracked inside. Now, who's lagging, NQ or ES?
Yes.
ES has more to
Yes.
drop, right?
ES can go to
Yeah,
here, which
yeah.
would be 45.68. And if you go on NQ, so ES has, let's measure it, right? It has another 132 points, another 3% to go. On NQ can drop to this level here. And it could offer a bounce. If NQ decides to break this November value area high, look where it would match. A 3% drop of NQ is 2.74 here. Would be another 3% on each would be pretty good. Would be good for the bulls, and they could cause some major pain for late bears to come in. Okay, so this is just analyzing on the longer time frames on volume profile, and this would be a really big level here. Your November POC matching with December VPOC here becomes a really good target, right? And now, we drew the FVP earlier here, and you see that that level is, it's going to be very important, because once they lose this, then you're targeting somewhere at 4,200 to be the retest. Okay, this was our, if you guys remember, the May consolidation we had. Is everybody following so far?
Shorty, you have March puts, right, on the SPYs?
Mm-hmm.
Is your target that 45.60 area?
Right here.
Okay.
Because if they do that, you think about this. Let's just do the same thing. I would, if they're to execute this, let's say in January, you're telling me you would get a decent drop from my puts in the direction that we have 3 months on. A 3% move to the POC of 454 would be $4 out of the money. So that would be pretty good for the puts.
Yep.
That's the idea behind it. I would definitely close it all here. Does that make sense?
Yep. Thanks.
Mm-hmm. Okay, so that's volume profiles, the 3 pieces that we had, right? So let's see, we covered this. let's see. This one we covered. So standard deviations and sigmas, right? You probably have seen me post this, whether on Twitter or even in the chat, right? And the knowledge seekers use them religiously, right? And I would say a lot of you guys use it here. So when you think about it, you can apply this anytime you have more than 2 days of consolidation. You can apply the sigmas. It works really well on the longer periods, right? So if you guys think about this on the longer picture here, this is where, you know, your range is right now. So if you think about this chart right here, the blue lines is your range. You see the bottom, you broke in, you came back and tested this, which happens to be, I would say, roughly 2%. With this run up here. Yeah. Right at 50%, they bounced right here. So now we created a range, and then the idea is if you're not making higher highs, that you're going to consolidate and build value here for the next move, whatever that is. So if this is the range here, this is where you enter this, I can grab the FVP from here and here, right? And now I'm able to know where's my first standard deviation. The first standard deviation is nothing more than just the first value area at 68%. So this would be my first sig right here. This would be my second sig. I'm sorry, first sig on the bottom skew. So now I have the first sigs identified. If I want to change this, I can double click on this and change what value area. Where would this one be?
95.
95.
Yeah, the second sigma would be 68 plus 13.6 plus 13.6, which is 27.2. You would add it and you would get 95. So if I change this to 95, the value area is going to shift now, and I'll make it easier for you guys. Let's see, does it draw lines? No. Oh, it's these lines. So now you're able to see what? This is our
Second
first.
sig.
This is our second standard
Second
deviation.
sig. Yeah.
And why do we draw it? Why does it matter where the second sig is, first sig?
It's
Second
the
sig is
value areas for 68%, 95, and 99.
Yep. And what else? Anyone?
The extremes.
Those are the extremes. And who shows up at extremes?
Long term.
Big
Buyers,
boys.
sellers, long term.
If our area for trading for this is value trading, correct? The green box. I'm sorry, the gray box. This is value trading, correct? Because it's fair value. It's 68%. We trade inside the fair value.
Right.
This is 2 standard deviations outside. So a little bit up, a little bit up. That would be the green zone. And then extreme is right here. So if we are trading inside, the big boys are, remember, where do you want to sell if you're a seller? You want to sell inside the value or above the value?
Above.
above.
So you want to sell above the value, and look where the above the value is showing you here for since 2020 November. It's showing you the extreme above the value is right here and right here. To shift these values is on 3 years, it takes a lot of volume. Does that make sense? Because you're adding a little bit of data to a 3-year pond of data. To shift it, it's pretty heavy.
Yeah.
So this here is pretty, I would say, pretty important levels in terms of bigger levels and your bias on highest levels. So now this would be our cumulative POC or CPOC or a mean or whatever you want to call it. So now if you're to fall back below this level on 3 years worth of data, can't read this. 458.91. If you're to lose that level, there's levels you could identify to know what are the potential levels for a bounce. Can I expect us to visit 412? Yes.
Of course.
Would I be naive to believe that there's not going to be a single bounce in between that? Yeah.
Right.
I can look at the rest of the body of this, right? And I can know that there's going to be a bounce at 436. right? If we lose 458, most likely it goes to 436. You lose this. High probability that this would happen here. If you lose this, this happens. Really
And if
high
you lose
probability.
that, you're going
You
to
see
Yeah.
skinny
Yes,
belly
baby.
below, right? You lose this. We know for a fact you're hitting 392 because that's the
Yep.
lower first sig. Once you establish, let's say sellers come in, initiative sellers step in here, and they lose this level.
Yep. Go to
Who
second
showed up
foot.
on these levels here was the responsible sellers.
Yeah, Shorty,
Right.
I've been expecting us to stay in this giant balance until election. I think we visit bottom of balance before election.
I think so too. I mean, because yeah, I don't try to bring in politics, but you know,
Right,
people
but
have to look good.
it's just an important, election.
Correct.
Honestly, just
And they're
Biden's
gonna do
treating
what they
everyone
have
wrong.
to do to make sure whatever is the agenda, right? And I don't care which way they go, right?
Mhm.
As long as I can day to day understand what's happening, I can make money. I don't care.
Mhm.
But the idea is, right, you have the election year, and you know Taiwan has an election year, and also they have ships right now in Taiwan area. Remember, I said Q1 something big has to happen in that area because of the elections.
Yeah, and them
So a
long
lot
term,
comes into play, right?
them long term swings can pay.
Exactly. Yeah. So if you look here, every time we approach 2-3 sigma, that's where you're going to have these long-term buyers and sellers because the price is advantageous to them. Whether it's fairly above the value, the 68% it is, but it's in the 2-3 sigma, this is where they're mostly taking their profits and closing their longs. At the bottom, they're buying it because there's a high potential for reversion to the mean. Okay. If they're able to break those means, let's say 2-3 with volume, that would mean that the initiation of these guys is fairly strong and that they're gonna expect to proceed in the direction that they're going. So I'm looking for a slide. It's this one here. When it's way above the value here, you're expecting responsible activity, or they're expecting them to start selling while they feed to the retail. Hey, how many banks in past 3 months upgraded the stock market, Apple, Tesla, to some crazy levels? Just recently, Apple got upgraded numerous times by one bank, and that same bank just downgraded them 2 months after. We haven't had an earnings release in between the periods when they upgraded and downgraded them. What are you downgrading them based off? Right? So you have to think about logically, right? Are they really buying Apple? Let's say this was Apple's chart, which should probably be the same, like this one. Are they really buying Apple right here?
Hell no.
You have to be naive to think that there's value for these people to buy it here. Right now, they're giving them all you can eat, right? Because, oh, we're at the retest level of the previous range high, right? And 2 times you're not able to hold it. All the pattern traders that are sitting in the world is like, oh my God, double top with the neckline here. So what they can expect is they can do this. They hit the neckline, you'll find the POC, and they're just going to bounce it, right? This was the node. Most likely it's going to be headed to 150 here. And I would expect a decent bounce there, right? And the cycle just repeats. Does everybody understand the 2-3 SIGs right now? I didn't mean to steer you guys away from it, but does everybody follow what it does and how to
And you
play it?
use this when you have consolidation, right?
You use it when you have 2+ days of consolidation. You can definitely use it on the longer periods like we did here for 3 years. These are not your, day-to-day levels. If you see the 2-3-6, you're entering swings. That's why I'm in a swing entry here. Let's say if we don't bounce at 458, that would be the best scenario for those in SPY puts for March. Let's say they give us a treat and they crack 458. I have no reason to close until we arrive to this level. But this level here would be super important for them because here they created a node. They're below it. If they don't crack this node now at, what is this, 470 soon, then most likely we're headed here. And if they push up again and I see, weakness on buying, well, then I would probably consider maybe May, June puts, and I would consider 430. Buy more time, extend my target. Even the CPOC for this year is not too far. Okay. So does everybody understand how to draw the FVP? And if you don't, if you go here, this is a video, you just have to go in the presentation mode here. And if you click, it's gonna start playing this video for you guys, and you guys can do the same thing. And I believe I annotate everything that you need to do to draw it on this video itself. Yep. Does that make sense?
Yeah.
Okay. Okay. I keep clicking the same video now. Okay, so this is a visual and example that combines your standard deviations, and my secret, and not really a secret, when I buy shares of companies, when I search for let's say Pfizer, right? If you look at Pfizer, right, a lot of people would say, man, why are you buying it here, right? But when you look at the data, right, where are we right now? Let's see, here's our 68, right? Sorry, the colors change based on the template. Just gonna enable this so you guys can actually see this. Okay, so this is our 68 of this period that we consolidated here at 26. Now you can kind of apply the logic, and who cares what, when you find a good company at these levels like Pfizer, and you look at the history, right, a little bit, this is a key levels for them right here, 26.96. Then I change this to 95, and it's sitting right here. I promised you that this level right here did not impact this sell-off that much here in these levels. You can go back and test it yourself. And then the 3 sig is right here. Okay. So you're telling me that I should wait until I see a green candle here. Higher high on the green candle right here, 27 something. And then this thing went to $30 and I had the opportunity to buy at 25. On a good company like this, I buy at the bottom of this. And that's exactly what I did on Pfizer. If this is to come back again to about 27 or this POC, I can add more. It would increase my average, but I can add more. But I have I would say a decent size I need for Pfizer. And you can do this on every stock, for instance, that you're buying. Like, you know, he brought in Pfizer. I would not necessarily buy Pfizer here because I would say we got, I'm sorry, not Pfizer, Verizon, much lower than here. I don't know if anyone had it on their list, but we've been watching this one. I don't even know for how long now. I would say for a very long period of time, we've been eyeing this right here.
Yeah,
They came in.
It just entered a giant skinny belly.
Oh yeah.
I'm targeting 50.
Yeah, so let's see, gray gray.
I posted it earlier.
Yeah, that's why I brought it up. It's at a good level here, but I think I have a really good fill for it. So now if you look at this, it just entered. It probably reached some extremes here before that. So if you go 95, here's 95. So second standard deviation. But if you zoom in a little bit, look at the volume nodes that they have here. Huge skinny belly, cracked, didn't really come here, eagerness, and you know the bottom of it they hit. So now can you expect them to run this all the way to, what is this, like 42? Yep. Above that, I mean, they can target this POC here at 50. And if you guys got it when I got it, it would be somewhere between 30 and 32 that you got this stock in your portfolio. But they also pay dividends. It's a really, really good company. But that's how you can look at it, right? From a longer perspective, you can use these SIGs, right, to identify where the other people are going to hop in. So you can hop in with them as well. And another one I'm watching is this one here, right? Like just to kind of give you an idea, right? I'm using, I can use the same concept. They consolidated here, right? They came back for a retest, so I can do either, oh, sorry. I can use this, or I can start from here and see what's happening, right? Where are they buying or selling right now? So let's see. So they sold off, they're below the POC. So do I have any interest maybe to buy this volume node where they're sitting right here? You could. I have no interest. Probably was better, obviously, to buy at the bottom of this volume node, but ideally, look where they bounced right here, 82, perfectly. So if I can get it somewhere cheaper, I would definitely, get some of this Nike. And that one probably gonna be where? Right here at 67. So if they offer anything in that range, I'd be heavily interested. Companies like that one, Starbucks. So Starbucks is just starting its fall right now. So I'm probably not gonna look at it for a longer period of time before I can acquire some shares. Same concept, right? They have, I would say, a little bit more to go. Yeah, I would not, yeah. I'll let other people buy this right here. Somewhere around 75, I'll be a buyer in Starbucks. Like, I don't know if you guys remember. You guys recall how long we waited for this? I think Dumpsty remembers it. He was eager to buy this. So this was a good one. You can do the same thing on Coke. I actually got Coke at a really good price. Probably should be getting ready to sell it here.
Was that when you were in Colombia?
This one? Not that type of Coke. But this is probably a good level to take some profits on this. I got it somewhere here. This is it's also a dividend company, but I use these 6 to confirm everything I'm buying to see where they're buying also. Okay. All right, so that covers that. Value area tips and tricks. If you're going to learn anything about volume profile and market profile, this is applicable to both, is to understand where are we in compared to the value, whether it's, it depends if you're a long-term swinger trader, if you're trading futures, or if you play options on SPY. You want to understand where are you compared to other of the same time frame. What I mean by that, if you're opening on, let's see here, on the daily profile of Coca-Cola. This is our daily profile. We're just going to go extended hours. Let's go on ES because it doesn't have these weird lines. Okay, so now if you think about this, right? If this was our value area, high here, I'm sorry, low. And if we opened below here, right? What does that tell you? If you're opening below the value area, what does that tell you? Bullish or bearish?
Bearish.
It's definitely bearish, right? Even you think about it just logically, there was once value here. We're no longer opening at that value. We're opening below your value because we can't find buyers. That's logically bearish. If you open below the POC, your bear sentiment, spikes a little bit. When you open below the PD value area low, it's quite a bit. If you gap down below the range low, right? Range low would be your PDL, for instance, right here. Of this day, I'm comparing this day to this day. So 27 was range low, and you see here at 9:30. Let's go RTH for a second. Okay, so if you opened, let's see, Friday is right here, and you opened where? Where did you open on Friday? Pretty much right in the area of your PDL, and you did not allow it, right, to go back, but you open below the value area low, and then when you reclaim the value area low, right? Do you guys remember this from the notes when we talked about? We had that 27 level. Do you guys 27 level we had here? Do you guys recall any of this? I think I wrote it in your Shorty's corner. Does anyone remember? No? Okay. So if you guys go here, that's actually a little bit higher on 30 minutes. This was our level. We needed to open about the 40. Then we had, if you guys remember this, I think it was 46 level that being asked, how do you get the 46? We had the 46 level sitting right here. And then above that, we had 54. You guys recall it was somewhere here, this POC. So for us, it was no interest of, hey, if we are able to reclaim 40, there's a high chance that you're going to hit and complete the PD value area high 80% rule, which would be targeting, I think it was 60 something, 57. So 57. So reclaiming of PD value area low is bullish. If you open below it and you reclaim this PD value area low, that's a really, really bullish setup. Can anyone conceptualize and explain why?
You rejected prices below and then you accepted higher into that value area.
Exactly. So if you're rejecting, anytime you fall outside of value area, that means you're rejecting the value inside. If you fell inside and then you reclaim it, that tells you that you're also rejecting the prices lower. If you're rejecting prices lower, what do you think you're going to test next? Well, you're going to test the extreme to see if the behavior changed on the top.
Usually with more force, right?
Well, they gave you all the force you could to get it back
Yeah.
up
Yeah.
from 47. They went back and they
Yeah.
tested the extreme, and
Yeah.
they said, hey, we don't find any value here. What
And
they
boom.
had to hold at that point, they had to hold this.
Right.
Why did they have to hold this from the prior day value area low? Because I'm drawing this with zones, right? This is the zone where we wanted to create acceptance, meaning right here. This is where the bulls had to create the acceptance. Did they? No, we closed right below it. So let's say tomorrow, right, we open above this POC and they come inside right here. Well, they could again test this here because that would mean that now they're shifting the value. Value area low is most likely going to shift here. If the value area high stays here, they could create a 3-day balance. It'd be more, right? It'd be
We
1,
could
2,
take a
3,
good
4.
long right there, right off of that retest.
This would be a good retest to go long because
Yeah.
now they're rejecting prices lower, right? They're seeking prices higher, but they could not close inside of this. If we open above, gap up, and stay here, they're gonna explore this multiple times. Here it's
Yeah.
gonna stay. Once they crack this area, most likely they're gonna be targeting the top here. I know I drew a bunch of crap here. Once they,
Yeah.
let's say, crack this area, immediately you can target that you're gonna hit this, this POC at, I think it's 54 and then 57. And then you zoom out a little bit and you see here, if we start building value above this, you're gonna be in some kind of 4-day balance being created here.
Yeah.
Okay. So when you look at the PowerPoint here that I was pointing to, the stock opens above the value area and then it falls back inside the value area. This is a strong bear signal. You should be able to visualize pretty much every single one of these bullets. If the stock price opens below the value and then it rallies back inside the value area, that's exactly the one that we just talked about. That's exactly what they did here, right? They fell back inside, right? If you think about it, they fell back inside and then they reclaimed it and they explored it higher. That's exactly what they did. If the stock price opens above, below the value and continues stay above, below, that's basically institutional buying, selling. You want the price is going to continue in the trend that we're in now. Right now, they're telling you the trend's slowing down multiple ways.
Yeah.
Indication of a trend: if a series of values is moving in a clear direction through time, the new price levels are being accepted and trend is finding acceptance. That's true, right? If the value areas begin to overlap and move in the opposite direction of the trend, the chances are good the trend is slowing down and beginning to balance. Well, would you not say that that's where we are right now?
Yeah.
We had higher high, lower low, lower high, lower low, lower high, lower low. Uh-oh, now we have a lower high, lower low, but they're overlapping. Now you have again lower high and lower low, but they're getting really, really tight. So if you're able to auction, let's say higher here, what is this, 46, you would most likely get a short squeeze.
We could go either way, right, Shorty?
Yeah, of course. I mean, you can go either way, but the trend, the point
Right,
of
right,
this
right.
is the trend is slowing down.
Yeah.
Okay. This is important to note. The price is either accepted or rejected. There's no, I don't know, oversold, overbought. None of that shit matters.
Right.
Price is going to be accepted or not accepted, just like you. If you're to, buy something, let's say you want to buy a house, and the house that you want to buy, the guy is asking $1 million. if the house is true market value, and the market values things. Like if you're in a house that's $500,000 and you put it up for, I had a neighbor, he was the laughing stock of the street. So he put up a house for a sale. He built it for about $700,000. Really nice house. He put it up for sale 3 months later for 1.7. And we stopped by. We're like, "Are you okay? Like, is everything clicking in your head?" He's like, "Yeah, there's a crazy market. People are gonna buy." Is he wrong for trying to sell at that
No,
level? No.
no, hell no.
He can ask whatever you want. But how much participants or how many bids did he get at 1.7?
Not many.
Zero.
None.
Zero. And then was he upset? No, I talked to him, like, right? He came out cutting grass. I was like, "Oh, it didn't go well," because like nobody bid. He knew what he was doing,
Yeah, of course.
right? If he built it for 7, sell it, he was trying to make $1 million in 4
He's
months.
trying to make as much as he can. Why not?
But that's, the price moved away from the value. He shifted the price way far from the value. And of course, he's a responsible seller. He's trying to sell and make money. But if the market was to dip, and let's say he's upside down on his mortgage, I'll be the first neighbor to go to him and offer him $350 cash for it. I would try to help him. Here's $350. You go on and buy a house somewhere in the boonies. I'll take this house. I can sit on it for a long time, right? That would mean me buying below the value and below the price that he actually built it for. I would be getting a 50% discount on it, right? And that's the same concept here. Long-term buyers are mostly active at the extremes. And if somebody accepted that price at 1.8, you know who would be the happiest person in it? Besides the guy selling, who would be the happiest person?
You?
It would be me and the neighbors around him.
Yeah.
Have you guys ever heard of the joke of a gypsy and a doctor selling the house?
No.
So a gypsy lived next to a doctor, right? And they had identical house. If you can, I mean, just like any neighborhood now, copy paste.
Yeah.
So the doctor lists his house for sale and he puts $500,000. And the gypsy looks at it. She's like, "Man, this guy's crazy." He's like, "I'm gonna sell it for $1 million." The gypsy lists his house for $1 million. And the doctor goes, "Man, it's like, why are you fucking crazy? Why are you listing your house for $1 million while we have the same house? Mine's $500,000. Well, the gypsy goes, "Well, when you sell your house, you say you live next to a gypsy. When I sell my house, I say I live next to a doctor." Right. So that perception is different, right? And you can do the same thing. But the stock market is that when you look at the market, is it in balance? Is in a short term slowdown? And right now we're in a slowdown. You want to be careful shorting because right now it's going to need somewhere to find more fuel for it. And importance for the next couple of days of where we open. And if you see, we'll get to it shortly on the single prints on the market profile. Are you seeing single prints or not? Is going to be really, really important. And we already have seen some single prints. Other time frame traders are any traders that are not daytime traders. So make sure you remember that. That was also on your quiz. I'm gonna release the quiz again here for newer people to take it. When the price moves away, remember this applies again to volume profile and market profile. When the price, this has been sitting here for I don't know how many, a year. When the price moves away from value in the last period, the 30 minutes, that's called a spike. Those are important, and that happened on Friday. As we were trading live, we said, what if they go back to POC? And what if it became, oh shit, they just did it. We went below, they cracked inside, they never allowed to crack below again, so there was no sellers involved anymore, and then they rallied back up. Right? So you want to pay attention to the last 30 minutes and see what's the behavior, right? If you print anything out from the PowerPoint and you want to learn value, I would print the next couple of slides from the value areas perspective, right? The way market opens up to relationship to the previous day, if you're a day trader, is your bread and butter. It really is. You want to understand where we are opening in relationship to the previous day so you can establish your bias for the day. You can accept if the price is being accepted or rejected, right? And that will give you 50% higher chance to have a better trade than without knowing this. So there's 4 concepts, right, that you should know by, remember it. You should be able to recognize it on a chart within 30 seconds. Are we opening outside the PDA but inside the range? Is anyone confused what this means? Right here. Anyone confused what this means? Could you visualize? Is there anyone that cannot visualize this? Guys, as a trader, you're a storyteller. You have to be able to tell the story of where the market. The best storytellers pretty much own the world, and that's not only in trading. That's also in the rest of your life. Can you visualize this and tell the story of this? Is there anyone that can't?
So the range would be the high of that value area, right?
The high of the day and the low of the day is the range. The value area is the 68% of the volume in that day.
Got it.
Okay, so good question. I was waiting for somebody new to ask. Glad you did. This is what it looks like. If our PD value area high is here, right? And this is PD value area low, this is opening with the PD value area, right? There's no range involved in this. If you're opening inside the range and you stay inside this PD value area high, that means you're accepting the value. You're accepting that value to trade inside. You're happy. When people are happy trading at a value, that means they are accepting the price. If you go back and you're constantly buying the bread at the bakery or whatever, right, at $3 and price stays at $3, are you going to keep buying it at $3? Do you have a reason not to buy it? That they haven't increased it, right? And you need it day to day. So
Yeah,
most likely
you're going to continue to buy it. Sure.
If the gas price right now goes to $15 a gallon, how many of you will email your boss and say, hey man, or woman, I cannot come to office 5 times a week? Any of you?
Yeah.
Oh, I would.
Well, you would question it because it would increase the expenses of your life, right? You have some kind of formula, how much you bring, how much you expend. And if it goes to $15 a gallon, you travel 40 miles an hour, you have some computations to do.
Yeah.
Like, oh shit, I can't come 5 times a day unless you give me $100,000 raise.
Yeah.
Right. And that's where, at that point, price would be rejected because most likely you would not be participating in buying there. So this is acceptance example, right? You're opening inside and you're staying inside. You had a quick drop. They can do this, right? They have freedom to drop this below the value, but they quickly reclaimed it and they stayed the whole day inside the value. That's opening within and accepting. That's the first example, and this is it. I added IBH and IBL just to kind of slowly introduce it to you guys. Then you have a rejection, right? This is our PD value area high and low here, right? But we are rejecting. Rejecting doesn't mean you're going lower. Rejecting means you don't accept that value as the value, whether it's value area high or low is irrelevant. In this case, you can be a bullish rejection or a bullish rejection. In this case, this is our PD value area high and we rejected it and we went lower. That means that this value that was being presented from prior day is no longer being accepted. On this case, we have a bullish rejection. We're going higher. Okay. Everyone following so far? We only covered 2. We covered acceptance, where you stay inside the value area. And now when you're opening within value area, but you're rejecting. If you're to think about confidence of the market, which one would you rank higher? Is market confident when it accepts inside the value and it never drops inside or outside, I'm sorry, or this one here when you reject it? Which one sends a firmer decision?
When you stay inside?
Yeah.
Acceptance.
Okay. If I open, I immediately get out of the value area from the prior day and never look back. Is that confident?
Yeah, that's very confident.
Yeah, that's very confident. And it depends in terms of context, right? If you see that we're inside the value area and we break it, let's say we break this one here. Let's say you break this one here and you come back. The confidence level on that play for the bulls is none.
Right.
right? If you pop above and you fail immediately, that's really bearish.
Yeah. You're
Right?
rejecting
And
that.
same thing would be on the bottom side, right? Let's say you pop outside and you reclaim it. The odds of you exploring the rest of the area, of the value area, are extremely high.
Yeah, that's not confident.
You have a lot of, buyers that are eager to explore prices higher. So I always think about it, how is it in terms of confidence? Is the price being accepted? Is it not being accepted? The confidence becomes really, really important. Opening outside, but within the range. So this is the example now, trader, that we have the PD value area high. You're above the value area, which is this little area here, right? If this is our value area here, I'm trying to put it, let's say this is our value area right here, this box, but you open above the value area, but below the range. This is confident, right? But it's not as confident as what? How could you increase the confidence of this open?
Totally
If
get it up.
if it breaks the range,
No,
and
just the
continue.
open, no breaking. What other confidence would be better than this one?
Open on the previous day's high, right?
Opening above the previous day's high would be more confident than this one. If you open here
Yeah, in continuation, yeah.
and you don't break the PDH, you continue higher, that's them accepting prices higher, and they're
Yeah.
not gonna look back.
Yeah.
Okay. It's also in your notes. So if you open outside of previous days, opening outside of the range, if you open outside the PDH or PDL, you cannot break. As long as price does not go back inside previous day range, market accepted the breakout. Okay.
Yeah, that does help in a lot.
This is very important.
Yeah, because I mean, if you know in which direction you're going, it's much better how to determine how you can play.
Yep. When you open outside of the VA but inside the range, this day can be choppy for some time, meaning it does not necessarily need to break immediately to the upside. On this type of day, as long as you're holding this PD value area high, you're bullish.
Yeah.
You're not bullish once you break PDH. You're bullish as long as you're holding PD value area high. As soon as you lose this PD value area high, it sets up for a downfall to PD value area low. That means you were not able to build value higher. Therefore, you're most likely going to touch that POC somewhere in between, hopefully on the bottom side of it, and explore the PD value area low, which sets up. This is your 80% rule.
Yeah, it's bearish.
Your 80% rule, and this is for new people, you want to listen up because it works 80% of the time. Let's say we open here and we crack below the PD value area high, and we're dancing on that line, and you have three, let's say 10-minute candles close below PD value area high. There's an 80% chance then that you're going to go from here to here. There's an 80% chance, as long as you get 3 10-minute or 5-minute candles, depending on your risk, there's a high chance you're going to visit this value area low. There's a handful of you that you just trade 80% rules in the Discord and you do pretty well because it has a really, really high chance of working. Okay. And the same is true on the opposite side, right? If you're on a bearish side open, if you want to remain bearish, you cannot reclaim the PD value area low. Here you can't lose PD value area high. Here you can't reclaim PD value area low. Does that make sense?
Yes.
Your question here for the 80% rule, the entire body of the candle must be,
That's correct.
inside.
The close has to be inside.
Yes.
The close, yeah, okay.
3 5-minute candles.
Some do 5, some do 10. If you're to ask, let's say, a professional trader would actually wait, because professional institutional traders, they don't need a lot of points. They need a handful of points. If they can catch 5 points every day on 100 contracts, that's plenty. So some of them wait even 15 and 30 minutes on these candles, just so you guys know.
Yeah.
Okay. Let's see. So opening outside, if I was to rank these in terms of confidence, bullish or bearish, this is a really confident market, as long as they don't break PDH or PDL. This one here, as long as the PD value area high on the bullish one doesn't break, you're bullish. The PDH break during the day is just the icing on the cake. On the opposite side is the PD value area low and then the PDL, right? That's your scenario. Opening outside. So this one here is opening within value area. These days are usually the ones that you watch for continuation. You need initiative people. You need initiative buyers or sellers, depending on where we are in terms of the context, right? This is, this is where typically you have a slowdown of a trend. And it's exactly what's happening, I would say, right now, right? And if you look here, your value areas are stacking a little bit, right? You're not making higher highs yet, because if you look here, you have a lower high, you have a lower high, you have a lower low, you have a lower low, right? So we haven't really changed the trend yet. That's why we say we're framing down still. We need to crack this above here, 47.60. Once you're able to crack this, man, your story can quickly go to 48.20.
Yeah.
Okay. And we just cleaned up, just so you guys know, we are literally at this POC here at the VPOC. And we have, I would say, you can quickly check how many VPOCs we have. We have a lot of VPOCs below. Here it goes. All the red lines means they're VPOCs, that they're most likely going to be retested at some point in near future. And typically we don't get this many on a run up like this, but it tells you a lot about the run up itself. Okay. Is there anyone confused about the value area and open in relationship to it? It's really important you guys have these slides and you can recognize quickly where we are opening. Because it's like a piece of a puzzle. Once you have this, you have the date type, you basically eliminated 70% of the problems for your trading. And then you add, a little bit of auction type of how we are opening. And it really can solidify your trading. And as long as you practice it, it makes it a lot easier to know who's in control. Is the price being accepted? Is it being rejected? And then you identify the key points, right? Which one can you not go over or under on for your sentiment? Are you guys able to at least start the puzzle? Because I'm not expecting you to put the puzzle and be accurate 100% right after the class. The idea is they understand the concept after the class.
Shorty, are you pardon me? Are you recording this?
Yes.
Yeah, I'm gonna have to cut it short, man. I'm getting into a lot of pain. Sorry,
No
guys.
worries, man. Hope you feel better.
Feel better.
Thanks a lot for everything, Shorty.
You're welcome.
I think I'm just starting
I
to get
understand
it.
everything up to this point. Everything's real clear. So thank you.
You're welcome.
Shorty, one question here. How to blend in IBH and IBL?
Good. Very
Along
good
with
question. So that's a very good question. I left it there to open that up kind of with ease, right? So if you look at this, and there's an indicator you guys can actually use for IBH, it's called initial balance. I like it a lot because this highlights this area that you guys see here as initial balance. So if you look here, for instance, how would I use this? Like, it's a very good question, and the reason why I had it. If you look at this area here, right? So I'm just gonna mark let me mark the previous day and then kind of remove the profiles. If this is my previous day value area low, and this is my previous day value area high, and we'll put this as a POC here. Okay, we'll put this one as a PD value area low, just so we have a whole story. Okay, and I'm gonna hide it. Okay, so now if you look at this, and I'm gonna go on RTH for simplicity purpose. If your initial balance day prior was here, which is basically, I would say, covered your value area. Most of the time it will be. The next day you have a IB that encompasses the previous day value area as well as the IB. What would that tell you?
Wow, that expanded.
When the IB is expanded or value area is expanded, what does it tell you about the participants?
They're a lot more active.
Who's active?
Short-term trader.
Short term, yeah, short term.
When it's a short, when the value area is narrow and IB is narrow, who likes to trade in fair values?
Short term traders.
Who likes to trade at the extremes and advantageous prices?
Other time frame.
Other time frame.
So if the area was expanded and we closed inside a wide balance IB, do you think it's short-term traders or long-term traders?
Long.
It's always long. When you have a narrow IB, that's not a healthy auction. When you have a wide balance like this, right? When you have a wide balance, initial balance, what did I tell you about the lamp? So I gave them an example of a lamp. Does anyone remember it?
The wider the balance, the less chance to get broken.
That's correct. So look at this day on, let's say for this day that we had on Friday, the balance is considered huge, 33. How many people shorted the initial balance and said we're going lower?
A lot of retail.
I mean, they hopped in with everything they had and they shorted here. And how'd that work out? If they were not quick enough, they got destroyed. When you have a wide balance, the odds of that balance getting broken are really, really low. When you have a day that has a wide balance like this, it's called what? What type of day is that? I'm segueing into the day types. What type of day is this?
Is that open test drive?
Don't confuse auction type with day type. So you have auction type and day types. I'm talking about day types.
A normal day.
Okay. How would you know if it's a normal day?
Is that extended typical thing? Or typical?
A trend day, is it a trend day?
No.
Is it a double distribution day? Okay.
Oh, typical.
Typical day.
Is it expanded typical?
It
No,
does not
unless it
break
breaks
down.
it.
Yeah.
There you go, KJ. It's not this one. It's not this one. It's not double. Is it trade range day?
Yes.
Yeah, could be. Yeah.
Could be. But this one was a huge balance. So is it sideways or typical?
Typical.
So now, when you know it's a typical day, and let's say you know a typical day and that your IB encompassed the previous day, Meowcat. It sounds weird to call you Meowcat. I might have to change you to something else. M-Trader. It just feels awful. I feel like I'm in a Brazers.com.
IB is great to identify day types for sure.
Yes. So now, if you have this, that your IB basically took out your previous day value area high and your value area low and encompassed the whole thing, that tells you somebody else entered the market just now. It's telling you they're there. And then, of course, how can I validate this? Bean, what do you think? How do I know that somebody entered the market here? How can I confirm it?
Access.
Exactly. I can check by access, right? If I go here and now I need to see something on the bottom, right? As soon as it comes up, because it takes its sweet time. If I check here, is there access?
Barely.
Barely. And that is what I would expect. Why would I expect barely access here? I touched it briefly earlier when I was on 8-hour candles.
Because we're still in balance. Or in range.
What kind of node did we have there? Was it a major node? Do you guys remember when I highlighted the node and I said that node?
Yeah.
That
So
node
it's a
was
small.
node was there. And it was tiny. Remember we highlighted it was tiny one. So
Yeah.
I didn't expect the volume to be as heavy. I expected whoever is defending that position to just show up there, right? And they showed up just there. That was enough. But now, if we are to expect, let's say we lose this, let's say market decides to actually sell off a little bit, 3% down, and they come here, would I expect the excess to be heavier here? Certainly. I would expect them to be more aggressive here because there was a longer consolidation. There was more participants here because this range was from here to here, right?
Yeah.
You're expecting this to be, you know, almost 71 points range. That's pretty good, right? It's a pretty good range they consolidated in. And now, if you think about this, if this was the range here that they also consolidated in, and I would say it's equivalent to the range here, and we're dropping, do you really think this is what we get out of this range unless it's a trap? Last time they gave us this range, we got a little bit more of a move. We got 3% move. So if they consolidated here and they don't regain this level, let's say, you know, whatever, 47, the value area low, they don't reclaim this quickly tomorrow, then they have the ability to do that drop. So I didn't anticipate the access to be high, and it's not high. Can we count this as access low, considering it has 2 TPOs? Guys, remember?
Yeah, it should be. As long as it's 2 and above.
More
right?
than, no, you need more than,
2 or
I
more,
think,
right?
2 or more, okay.
This is market profile. This is 2 or more, right? So each letter here, if you're new, is there anyone that's never seen market profile, these letters, as people call them? Is there anyone
I
that
have.
you have or have not?
I have not.
Okay, good. So if you're new to this, think about this as each letter represents 30 minutes of trading. Where the letter is, it tells you at what price it traded. So A period, 30 minutes, the open, right? A is the first letter. At the open at 9:30, we started, right? And this here, the little asterisk indicates, for this case, indicates the open. We traded here, right? And then we spent the range of 91.75 to 9100 on this coffee commodity. Then the B period, the next 30-minute candles, auctioned higher at 91.75, but it became a selling tail because what? No other letter made a higher high. No other 30-minute candle made a higher high. So this is when you have a single letter, like here, B period, this is called a selling tail or excess high. That means that there was other participants when we arrived at 91.90, they sold off from there. So this is called selling tail and usually indicates you need a little bit of context, whether there was other time frame buyers or sellers. In this case, on the top, it would be considered other time frame sellers coming in. Okay. On the bottom, you have a buying tail in period I. So you can see the C period stayed inside the B. So this would be an inside candle. If you were to convert this to candles, this would just be a candle that's sitting inside this period. Does that make sense? This is also a candle that has the balance here, and a candle is sitting right here. Then you see the D period broke the candle balance of A, B, and C. You guys see that? The D period's the one, the auction lower than your initial balance. Your initial balance is A plus B, correct? Because 30 minutes is A, the B is another 30 minutes, and our IB is set in the first hour of trading. So the D period started framing down. And then you see the E never framed higher. We never really broke the high back here that initiated the new low. Are you following so far, everybody?
Yeah, so each letter represents 30 minutes.
That's correct. And then you see here, I'm just gonna, let me erase this here.
Yeah, when I took a break and I was MIA and I came back seeing all these letters, I was like, holy crap, this looks confusing, but it's really
No, that's very simple. So now you look here, the price traded at 91.25. The most times it traded at this level. So where did the price spend the most time? At 91.25, therefore it becomes point of control on TPO. So you see the A and B crossed here, C crossed at that level, D crossed, E, F, G, and H. Period I never crossed this level. So period I traded where in terms of value?
Below it.
It traded below the value constantly. G went above and had the shortest range, I would say, from all the periods. I'm sorry, F had a fairly tight range as well, because this looked like a really good trap. It never cracked above D here. And now you can calculate, you know, some of us did this manually before. I don't know if Burnside did, but you can calculate the value area based off the number of letters where they traded. And this is the value area where 68% of the time was spent between 91.55 and 90.80. Does that make sense?
Mhm.
And in this case here, dependent when, you know, when you start the TPOs, we start at 9:30. Would this be, this letter I is your last period in this case? Would this be a spike?
Yes.
This would be a spike. If this is the last period of the day, in our case, just so you guys know, it's M period. N is the closing. It's called the settle period. The settling period is the N period. In this case, it seems like the J was for coffee commodities. So far, is anyone confused?
No.
Okay, so buying tails, these right here that you see, the B, and then you have the I, which is buying tail. This is selling tail. This is indicating that there's some aggression from sellers, other time frame sellers, meaning not the day trader people. We don't have enough volume to do this. And you have buying that also somebody found value. You know, they started buying here below the value. Remember, big boys buy at advantageous prices. They don't necessarily want to buy at value and sell here. That's me and you, two-sided activity. We buy here, sell here, we cover here and here. They buy here and they're going to sell here. Okay. This is important here. If you have more than two TPOs at top or bottom, means two periods where Wizard but was not able to auction lower, unfinished auction. If we had a C period here, let's say C period extended all the way up here. Sorry, my drawing is horrible. If this was C period here, let's say it's extended all the way to the top. Meowcat, what would that indicate?
The double top.
So it would be a double top, or otherwise known as a failed auction.
Yep.
If you have multiple periods at the top, if you have two letters at the top or the bottom, like this, right? That means unfinished auction. Why did the unfinished auction matter?
Because
If
that
this
means
was-
there's unfinished business.
That means unfinished business. That means that they have to come back and resolve it. In an auction, if you ever attended an auction, is there ever an auction that there's no winner? If you're to go on a car auction, can that guy auction forever and nobody wins?
No.
No.
He would be fired the next day. When you go to an auction, the goal of an auction is to do what? Is to sell and to buy. Somebody's selling a car. On the other side, somebody has to buy it. And the way they find the price is how? They start with $5 on the auction. They go 10, 15, 20, comes to 30. The guy goes going once 30. And let's say, let's say Mr. Bean is bid at 30 and he's the only guy that raised his hand. And they're like, okay, 35. Nobody raises their hand. 35 going once, twice. Remember, they create chaos. And nobody raises their hand. Who won?
Mr. Bean.
Mr. Bean at 30. So that auction is completed, right? If he was to sell the same product again, the auctioneer, can he start at 30? Would it be a successful auction for him to start at 30?
And he has to probably go lower to find buyers.
If you're an auctioneer, this is a trick question, but a logical question. Let's say this was the price that we were auctioning. And this is the winner, where a winner was, let's say at 9,200 here. Where would you start your next auction from?
9200.
9200.
Right there. Yeah, same.
92. I mean, didn't he accept the highest
You would
price?
start right here at 9,200 where it ended.
No, 9300 at
90.
least.
Yeah, I'd ask for
Nine-
more. See if there's any buyers
Yeah, and then go
that
lower.
come in.
If
Ah,
there's
yeah.
not any.
That's correct. If there's not any buyers, you could start it here. A smart auctioneer, if he's selling the same product, you know what he would do? He would start it where he knows where the buyers were.
Yeah.
If I know the highest volume concentration of my buyers for this car is here, I'll hit him one time at 91.30. The next buyer is going to immediately, you always have that one person that's like, the price is at $10. They're like 25. And everybody's like, what the fuck? What? We didn't even make 2 bids yet. From here, you're going to have egos. And in real life, you have a lot of people that are egocentric. They're going to bid out of this trying to win. So they're going to go at 25 and excuse my language. And then the dick measuring contest starts. And then they're like, oh my God, I'll buy it here. And then this guy is at 30. He's like, no, man, I want this at 35. And that's when they create euphoria on the market auction. I told you guys I went with my wife to a charity event recently, and we bid on a couple of items, right? And one guy bid on I think it was a 10-day vacation or a cabin. And I mean, you can rent a top of the line cabin here in Georgia. I'm talking about like all the bells and whistles on the river, everything from maybe $4,000 for a week. This one started at 5. Right? And it's okay. It's charity. No problem. We'll bid 5. It ended up at $11,000.
Wow.
And it was the way the auction was done, right? As we started bidding, what do you think they started? This was for kids that suffered from cancer. What do you think the images and videos started showing as we were bidding on this?
The kids.
All the sick
emotion.
kids. Yeah.
It started showing all the kids that they're dying and they're losing hair, and that sparks a certain emotion for people that are in the bid still. As the auction slowed down, they intensified the videos. And I told my wife, I was like, this is my max bid. I'm not going more than this, right? I'm being rational. I'm willing to help. I'll help them somewhere else. But I'm not willing to pay $11,000 for 5 days in the cabin. And then she found another item where it was, if you watched Yellowstone, spending a dinner and in the Yellowstone with the what's the guy?
Cole Hauser? Rip?
Rip. I quickly declined that auction, and I said I'm not bidding on any of that. It started at $10,000 for 2 nights with Rip, and I was like, well, I might not see my wife after that, so we're not bidding on this one. But that's the same concept of the auctions, right? The auctioneer knows when to hit it, and it's also in the stock market. How come all the good news came out in the stock market when we hit 4,800? Just go back to your news. Go, if whatever news media you watch, every bank said we're in a bull market. Go look. Every single bank expects a bull market to start now.
They want retail to buy their shares.
Guys, these big boys are not going to sell it to each other. They're not stupid. They need individuals to step in. And the only way that you get individuals to do something is to change their feeling. In the live auction that I went to, they put sad stuff. They gave you free alcohol, right?
Of course.
Emotions go up. You see a lot of sad kids, and of course, I contributed. I'm not cheap ass. I gave them $2,500 for a picture, but I'm not willing to give you 10 grand for 5 days, or with a Rip, $10,000 to spend at dinner and whatever with the guy that's famous. But people bid on, right? And then of course you have spoofers. I don't know if you has anyone ever been to a car auction or any of it, house auction? Have you ever noticed that there's one person that comes out of the gate firing with the bids?
He's probably fake, right?
He's fake. Yeah. He's the guy to initiate the euphoria. He's there immediately raising his number higher, right? And he's a paid actor of the auction to make sure the auction's live. And of course, if he wins, next week on that same auction is the same car. Because he didn't buy it.
That's smart though.
No, it happens all the time. And same thing in here. I mean, all the banks upgraded. Apple upgraded to 220. Nvidia's upgraded to 650. Go back. I dare you to spend 20 minutes of your time. Go back in 2006 and 2007. What the news said about the stock market.
Amazing.
It's the same exact stuff that they're telling you right now. What in the
What about
banks?
inflation?
What about 41.40 when we were coming down? Why didn't they say it was a good time to buy then?
Because they need to buy the retail shares and scare them.
Exactly, the liquidity. They can't compete with us to buy. They need to buy on their own. If they told you to buy, if 100 million people, let's say 10 million people bought 3 shares of Pfizer, that's 30 million shares, right? How much would be left for them?
Right.
So the idea is to scare you away so they can buy. And when they're at the top is to make you feel like you missed something. So you will buy from them while they're selling. A lot of people fall for it, but just go check 2006, 2007 September news. You'll see. Any questions on this so far? So initial balance, just to kind of reiterate, initial balance is the first hour. That's your A and B periods, right? In correlation to value areas, if your IBs are in line with, let's say, previous day IB, with the range, most likely you're going to have just a normal balance day. If the IB, let's say it's covering like the previous day, cover the previous day, somebody entered the market, there's a high chance that day after that you're going to explore higher or lower. And that's where you look at access to see, is it on the top or is it on the bottom, meaning selling tail or buying tail. And where we open tomorrow is going to tell us a lot, whether we're going to be bullish or bearish.
Shorty, I have a question. It's not covered on this, and you may cover it in the future, I'm not sure. But the I period's the late spike, right?
Mhm.
So if we're looking at,
your
they
settle.
say you look for the base of the late spike, that if it doesn't overtake that, we're continuing down.
Mhm.
Okay, so in this situation, is the base 990, or is the base down where we end up getting the D period combined?
So for me,
In that rule, yeah, go ahead.
for me, the base spike starts right here.
Okay.
Some people play base spikes off of single prints, right? You
Okay.
can consider this to be the base spike here.
Because you
right?
got like 4 periods, you don't want to pick it up where it actually starts.
Exactly. Yeah.
Okay.
I count from here. This is me. This is just
Uh-huh.
Shorty. The way I play it, I would count here. You have the books. If you look at Steidelmeyer, right? If you read his book, if this is our value area low, right here, this is where he would start on the break of the value area was the base start. This is good as long as like you see this period here is all single prints and D period. They went 5 low.
Mm-hmm.
You can start this here typically. Because if it's
Mhm.
a typical day and then you explore and you expand the IB in this case, which probably is somewhere, IB is here and your value area is lower. So you broke the IB, but you stayed relatively close to it. So if you break the value area, that's considered a spike in the last period. But if this one had, let's say, an E here, I'm trying my best to draw it. If it had E here, 3 E's here, and only 2 D's here, I could not count this as a spike start here.
Okay.
For me, it would be more.
Bring it down to there. Okay.
Exactly.
So basically, if it's 2, you can count it. Once it goes
Exactly.
above 2, it's kind of like, no, the base has got to start there.
Yeah, exactly. That's how I look at it. And it works
okay.
for me, right? And it doesn't mean it's the right or wrong way. Peter looks at the value area, right? But I would say a lot changed since Peter wrote the book or
Right.
invented the method. Okay. Any other question? That's a very good question. Okay. I'll add something to this. There's something a settled price. Does anyone know what the settled price is? CK, if you know, just ignore a question.
The day candle close?
At what time?
4 p.m.
4:15.
415 is the settle price.
15.
You know you can trade SPY and SPX till 415 if it's not 0 day. Guys know that?
Yeah. Yeah. Options too.
Yeah, options you can trade till 415 if it's not 0 DT. Your 0 DT settles at 4 cash on SPX. Right? On SPY is different, basically. You have to have shares. But 415 is your settle price. The reason why I bring this up, I brought it up to you guys about, you guys remember the inventory? What we talked about not too long ago about inventory being short or long?
Yeah.
Okay, so overnight inventory plays a role based on the settle price, right? So if you guys have, I would say if you settle the price at, let's say 4,500, and overnight we are well above 4,500, everything traded above 4,500, it is believed that overnight inventory is what?
Not long.
Net long. If you're trading at that level, what is it? Like 45.
Balance.
It's basically balanced. There's no positioning an overnight session. And why is that important? Is because you have the markets are 24/7. It's Globex, right? I mean, everybody's trading. It's the most liquid piece of investment vehicle in the world, the ES and NQ, right? So they're trading, and that positioning is important. It's important to know this because if the net inventory is long, right? And let's say you come back from net inventory and we open 9:30 comes in and they start selling. Why do you think they will start selling at open?
They want to liquidate the weak hands.
Exactly. They want to liquidate those overnight longs. And if there's a POC below in that area, that becomes a very good spot to go long. Because all those people that just got liquidated, right, they're most likely going to have a stop loss somewhere. Once they close their longs and you come to that POC, what do you think the cash session does?
Buy it up.
They're going to buy it up, right? They took the weak hands out. And the same is true if you're net short. If you're spending a lot of time below settlement close, below the price, that means you're short. So that's why now I'm going to ask you, can you see how the auction type open can integrate into this? If you have a POC that's at the bottom and that inventory was net long, when we open, we can sell off from the top where the inventory was long. We can test drive, we can come and test the POC and auction higher. Wouldn't that be an open test drive?
Yeah.
Yeah.
And same can be said if it's vice versa, right? If it's bearish.
I see what you mean now. Like when you said the next day they start the auction back off at the POC.
Yeah, they can kick it off. They tested the POC, and that would be an open test drive. We test the level and we drive again. We go in the direction that we want it to. Okay. So does everybody understand the inventory? Do I need to add specific slide to it so you guys can maybe remember it?
If you can, that would be great.
Yeah, I'll add
I
a
hate
slide
to
here
ask.
no, it's not a big deal. I have it in my head. That's why. So like I asked my father-in-law, I'm like, hey, when are we gonna build this fire pit? He's like, I have it in my head, and I'm like, oh, great. Well, I don't have it in my head, and I can't visualize it. So no,
I got a question on this one too. I've heard from a couple different people how they do it, and some people are doing like 1 minute on that opening candle for the drive for determining the high and low of the candle for the bounce retest, or depending on if it's holding long or short. What time period do you like to take?
The opening period is 30 minutes.
I mean, do you do an opening candle with the opening drive?
I do 1 minute. Mine is always 1 minute.
Okay.
Yeah,
That's
the
what I'm
candle
asking.
is 1 minute. Yeah, I do the 1 minute high and low, and that tells me, how are you positioned? How are you doing on that? Oh, hello.
Yeah.
Can you guys hear me?
Yeah.
Yes, we can hear you.
Yes, we hear you.
Oh, something happened. I lost my screens for a second.
Oh.
I don't know. Did it blink for you guys or no?
No.
Just me.
No.
Oh. Okay. And You guys will laugh when you find out what happened with my internet, but I'll save that for the last.
One
Yes,
of the kids.
I
I
looked at
bet.
the one. No, I wish it was the kids.
Um,
So I do look at the 1 minute, but for the 30 minutes, when I establish what kind of drive to reconfirm, I need to make sure that the 30-minute low, the high, were not taken out to validate those auction types. Right. So if we had a PDH, let's say above, let me go there. So initial balance high, is everybody okay with this? Is there anyone that's not? It's your first 1 hour, right? There are certain rules about IBH, and we can cover this in more detail, where it gives you 88% chance that it's going to work, and it actually, I would say, it works a lot of times, right? Because it does have a 88% chance. If you spend time above IBH, if you spend, let's say, 3 5-minute candles above the IBH after 10:30, then the 88% chance that the low of the day has been set. Does everybody understand that?
Mhm.
And same is true for opposite. If you spend, 3, 5, or 10-minute candles, whatever your risk is, or how probable you want to be, if you spend it below IBL, then the setting of IBH, the high of the day, is set 88% of the time. So the way you can play this, let's say in the first case, if we are above IBH and we know the low of the day has been set, and you're coming to the low of the day, let's say, or you're coming to closer to the POC that's close to the low of the day, that would be a very good long, because there's an 88% chance that you're going to get a bounce from there. You just have to determine if there's a high volume node in the area, or you can take the IBL. If it comes very low to the low of the day, that minimizes your risk, because you can put the risk a couple of ticks or points below the low of the day, and you can enjoy the long. And that was similar what happened on Friday. Okay. If the IB is wide, you have to keep that in mind. If the IB is super wide, more likely you're going to trade inside that IB for the rest of the day. Okay. And if the price opens above previous day value and IB is formed higher than PD value, this is a bull sentiment. Same is true for opposite. Somebody asked, how do you use them? If we are trending above the IBs or below, and I'm not saying you're consolidating at those levels, but you're breaking them, it's best to go with that trend of the initial balance. It's not always the case, because there's anomalies, right? But if we're breaking the IB, we're doing an extension on the IB, most likely it's the best for you to proceed in that direction. Okay. Here, I'll give you some examples, right? I don't know why this, it just went on my different screen. I don't know how to change back. So if you guys look here, is this big enough for everyone? So if you guys look, TPO, that's the two, and you guys have this PowerPoint, just so you know, 2 TPOs at the top that initiates a failed auction. And so it's going to have to be resolved. They have a high probability to be fixed when you're in a D shape. When you're in a trend day, they don't necessarily have the same high probability of being fixed. If this is a D shape, it has a really high chance of being resolved. If it's 1 TPO on the bottom, that's also considered a poor low in this case, not poor high, and they are most likely to be resolved and refixed like they were here. Okay. There's something called a halfback. Does anyone remember what that is?
50% back to the middle of the
50, yeah, it's the 50% of the range of that day, right? And typically, you want to see some halfbacks. If you start seeing too many halfbacks in a trend day, that means the trend is slowing down a little bit, right? So you want to pay attention to the halfbacks, because it's the 50% of the previous day's range.
Shorty,
Okay.
when you say you have a poor high or poor low and it needs to be fixed, does that you're meaning that the price needs to return there?
That's correct. It needs to return there, because, for instance, in this example here, if you look, so this was our poor high here, right? If this price, where is it? If this price was to auction, let's say we went higher than this POC, because that was the sentiment there. If we went higher here, high odds were that we were gonna then fix this here. that would be your target above the POC. You would have the value area high for a trim. You keep your runners till you clean up this failed auction at the top. Because remember, in the auctions, you got to have a clear winner at some point. Here, and you basically will need sellers to be done selling. And here as well, you will need somebody to finally stop selling here and you buy it. And here you need people to stop buying. Does that make sense?
Yeah.
You need a clear winner on both sides. Okay. Here,
Can you repeat that last one?
say it again.
Can you repeat that last thing you just said?
Yeah. So you definitely need, when you're going higher, you're looking to shut off what?
Buying.
You need to stop buying. So there needs to be a clear winner at the buying, right? And when you're selling, you're looking to sell. When you're going lower, what are you looking to sell off? To shut off what?
Selling.
You need to shut off the selling. So there needs to be a clear winner on the bottom as well. You need to have on the footprints, you would have a 0 on side here and a 0 on the top. If you have two numbers on them, and then we'll get there shortly. On the footprints, if you have numbers that are like, let's say 39 and 5, that means a failed auction. Here it's 2 TPOs. When you have a failed auction, let's say in this scenario here, we reclaim this POC here and a halfback. I would target the value area highs of the 2 days to be the first target. But ultimately, if you crack this level that's sitting right there, the magnet would be that they resolve this failed auction at the top. Failed auctions get to revisit it to be cleared soon. Because you always need a completed auction. They aim for that. A completed auction signals an end-to-end trend and a shift to the opposite side, just like we did with the car. If you completed the auction, the auction ended, then you have to go in the opposite direction somewhere. Okay. This leads into the date types. This is fairly important, just like the value area, the 4 scenarios in the value area. We have, I would say, 5 date types, right? So you have the normal days, right? Entire range day is set in the first period. This is your IB. Typically, normal days are the ones that we get to experience until then you shift normally here in a normal variation here in the trend day. Okay. This is, I would say, a lot of times this is where market spends between these 3 here. Double distributions, they tend to show lack of confidence on both ends, right? Because they create a HVN on one side and they are unable to crack above and they bring it back below and they accumulate. On the normal days, there's no range extensions, right? They are brief and they quickly reverse to IB. You guys can definitely find this lately on it. Wide initial balance and that balance is not broken. So I covered just moments ago, I gave you an example of that. So if you guys look, let's see, let's go on. So if you guys look here, this was your initial balance here. I'm just gonna look at the initial balance here. Initial balance was set in the first hour, right? And it was 33 points, right? And the whole day range was how much? 40 points. What's 33 divided by 40? Anyone? Anyone fast enough?
Around
I don't know, is it like 75? Yeah.
Should be about, I would say, 84, 83%. $82.5. And we are basing this that it should be about 85% of the range set. So this tells you this is, in terms of days, this is a normal day. Wider the balance, the harder the break, hence normal days tend to stay within the balance. Who is in control?
Short-term
trader.
Always short term. On a normal variation, and I'm not switching back and I can find every single one. You guys should be able to visualize this. IB, the date type, and the range. You guys should be able to literally see it. As you close your eyes, you can visualize every one of these. Range extensions occur during the first half of the day. Balance is not as wide as normal days. So this day here, there's an example right last week. It looks like a normal day, but it's not nearly as wide. Balance to unbalance and then adjusted balance. So that means that we break the extensions, right? They occur on both sides and we expand it, but we don't necessarily close above it. On most extreme normal variation day, the IB roughly doubles the initial balance. That means you come to the IB, twice the IB, but you don't go beyond that. And then you fall back inside and you stay there outside the IB. Does that make sense?
Mm-hmm.
If extension is excessive, long-term is control. Usually this is 50-50. Okay.
Can
Initial
we
balance.
picture normal variation like a double distribution?
No, you can't. So it would look like more like, let's see. So if you look at this one here, right? Pay attention to this here. This IB here was, I would say 33.
Mm-hmm.
Picture this one right here. This one is 20. That's a, might not seem like a big difference to you, but it's a huge difference. Right, so we broke the IB here, right? You see how we spent time above it here?
Yeah.
We spent the time above it. Doesn't necessarily mean you have to close above it, but look what happened then. You went, and did you spend any time anywhere else?
Bottom.
Yeah. You extended both of them and you closed below it. On this day here, on a wide balance, where did you close?
In between.
You closed in
Between.
between. Yeah.
Between.
Just normal variation and a normal day. Normal day, you close inside.
Okay.
You close inside. Here, you close outside. As long as the IB is not beyond 2x, and this little cool indicator, you can do the 2x. Got how? Here it goes. So here, for instance, in this day, this is the 2x. In order for this to be a trend day, we would need to go beyond 2x.
Yeah.
Usually, probability of us going, 3x of an IB is the odd. I think that chances are like 7%, so not very high. But as long as you're inside here, that's considered normal variation, and as long as you close in between, that's normal variation. Okay. So that's this one here. On most extreme normal variation, you stay inside, divided. Normal trend day, initial balance is not wide, and typically we have access within the first periods. This is important to identify as a trend day. You're above the 2x and you're going, market moves in one direction and close that directional extreme. Meaning if you're going higher, that you're closing above that POC, if it's a P shape or lowercase b, if you're bearish. And typically, the third to last bullet, typically 5 or less TPO wide. Can everybody visualize this? What does this mean? Does anyone not know what it means?
It's a little tough to visualize.
Oh, like you saying that excessive? It's not like not that much.
No, I want
It's like a D day maybe, and just we're at the POC in a range day, kind of looking. I don't know. Sorry.
That's okay. I'm gonna give you guys an explanation. It's gonna make sense in 15 seconds. All right. Five TPO wide. Okay. So we're just gonna hide this guy first. No, not this guy. This is our TPO, right? Everybody agree? This is your TPOs. So on the bottom, we have one TPO. Here we have two TPOs. 1, 2, 1, 2, 3, 4 TPOs. How wide is this TPO? 1, 2, 3, 4, 5. This one is 6.
Why?
This one is 7 TPO wide. So this one is 7. This one is 8. And we're gonna hide this fella here so I can see these colors. So now you can see 1, 2, 3, 4, 5, 6, 7, 8 periods wide. And this one says on a normal trend day, you should never concentrate that much time at a certain level, because if you're concentrating on time, that means you're building value. when you're trading, when something is aggressive, they're rejecting the value, they're going higher. They should not spend a lot of time at these points. Remember, when you're bullish, they're not going to spend a lot of time. When you see a P-shape profile, let's see, let's find one. I'm just going to make this a little bit smaller. Let's go 4 because it can give us a better.
P-shapes are trend days.
Yeah,
December
P-shape.
13 will be the one.
Okay, so let's take a look at what is this? December 20th.
20.
And this one is, if you look at it, it has 1, 2, 3, 4, 5, 6, 7 at the top. And then typically, if you have that many at the top, that means you concentrate too much. You get a little bit of punishment and you get a pullback. Let's look for one that's like a true P shape somewhere, if we have one. Everything's been, December's been an awkward month. This is consolidation. Let's look at this one here. So you have 1, 2, 3, 4, 1, 2, 3, 4, and look what happens. Did they go down from here? Does that make sense? Why?
Yeah.
If you're spending too much time at a level, that means you're accepting that value there. When you're in a bullish trend, when you're in a trend day, should you stop a lot, or should you be just continuing making higher highs and higher lows with emotional buying occurring?
Just continue.
You should
You find
continue.
value.
You should continue, and the value should catch up with what?
Well, you should catch up the price.
Price.
Keep
Value
going
should
up.
catch up the price. So that's why you don't want to spend too much time creating value elsewhere, right? When you have this long term is in control, that's considered an imbalanced market, right? This is more balanced. This is balanced to imbalance, and this one is, this goes balanced to imbalance as well. This is similar. So you can have a double distribution that's a trend day, right? You guys have seen me, or heard me, I'm sorry, say, you know, we have a double distribution day, but be careful. For instance, this one here seems to be kind of like a double distribution. You have skinny belly, skinny here, right? You have single prints in between here and here, right? So the way you treat this is one distribution here. Oh, sorry. Like this is one distribution here. And then you have a distribution lower, and each one of these is going to have a POC and a value area, right? So if you're able to, let's say the price auctions through these single prints here and they close here, that means the price is being rejected from the top and the lower distribution here is being accepted. Most likely you're going to continue lower. As soon as you break that value area low, you can expect the crack to continue. So these single prints here in this case are the division between price acceptance higher and lower. Okay, make sense so far? Everyone following? But if, let's say we closed above this high volume node that's sitting right here, the heart of it, that's where I say you want to be careful shorting this, because this usually can cause a major spike, and same intraday as well, right? And see here, if you look at it, if you go below this, you can continue much lower, because that means that the confidence when you have a B, right? When you think about this. So we had confidence, we are here now. Oh, never mind. Well, let's go lower and look for value. There's no market confidence to continue. Market confidence the best when you're just going higher high, higher lows, or lower high, lower lows. When you're stuck in between, this is indecisive, I would say, market auction. It's not very clear. So you can have a bullish one as long as you close above the higher volume node, higher distribution, or a bearish one if you close on the bottom half of the distribution. So this one can have a double distribution trend day or a bearish trend day, bullish or bearish. Does that make sense?
Yes.
Yeah.
Neutral days, these are tough. This is where a lot of people, this is a trapping profile, right? Where you have a range extension at both ends, they cancel out and reproduce the auction between extremes. This is really no confidence at all. Long people are not involved at all, and this range is much smaller than a normal day, right? So this is how you can classify this. And as soon as you see this, is the best to kind of turn off your monitor and just go away. Does that make sense?
Yeah.
Okay. I add some notes here. This covers the, I think we covered this initiation where people are in terms of buying and selling. TPO count, honestly, would not worry about it. I do not use it at all. I just added it in case anyone had interest in it and how to count the TPOs and how to differentiate imbalance days, who's in control, long-term, short-term. I wouldn't say you guys need that. It would create more confusion.
Shorty, really quick before you proceed, for that last thing you talked about for the range extension, so you're looking at the first hour initial balance and you're looking for the range to be extended both ways, like within the next hour after that, or like
At
would they
all.
break the top or break the top?
You make a conclusion on the day after the day is done.
Oh, okay.
Yep.
Okay.
And typically these are very nasty days, and you can identify them. Like for instance, here, like this is, I guess this was half day. Well, let me turn on the candles. You can find it here shortly.
It's always like that.
Yeah. So for instance, look at this day here, 21st. You see how you went above, you went below, and you closed, I would say, deadly on to the POC here. Well, maybe not, but definitely 50%. You close right pretty much at 50% there at the halfback of it. Typically, you're gonna close there unless it's an extreme close, but I would never consider on a tight narrow range like that anything extreme. If it's a wide balance, like we did Friday, you have a wide balance and you're closing at the upper half of the value area, high or low. Those are extreme closes on a neutral day. Does that make sense?
Yeah, so that slide that you were talking about the various kind of days, you're not really looking to make judgments within the day as it's developing. You're looking at it after
For the day types, yes, because I can use, for instance, this day type here. I can use this. Let me say, watch this. On this day type here, what would you consider this to be? What type of day is this?
Neutral variation.
Neutral.
Okay. On profile, on volume profile, what type of day would you guys say this is?
Maybe a lowercase b. I say lowercase b.
I'd say a D.
D, more like.
Well, this looks more like I would say like a D shape, right? It has a pretty good distribution here. The worst case, you can consider it a double distribution, but it's not really clean, I would say, right? On RTH, it's not clean double distribution. Here's your ETH. This looks like a perfect, I would say, D shape. Distribution nicely concentrated in the middle, right? Skew is right in the middle as well. So this is definitely a D shape on the day. And you close right at the POC. So what insight do we have about tomorrow or Monday? So yeah, tomorrow.
We'll close under the 50%, so it's most likely will go lower.
Okay. And if they quickly reclaim this POC, can you stay bearish?
No.
No, this is going to be a bullish setup, right? If they gap up tomorrow, which I think they will, just intuition here. If they gap up tomorrow, they can potentially test this poor high at the top. Right. So this is a D shape. I use it after the fact. If I see the initial balance, that's why I use initial balance intraday. If I see that, let's say tomorrow we open an initial balance is 7 points, like we've had some, like let's say it's this much, it's 13 points. Well, I anticipate that we're going to have a breakout of the initial balance, and I can go with the flow of the initial balance. In this case, let's say this is the initial balance tomorrow, and they crack this to the upside. I can see the probabilities working in its favor because they don't have much until the poor high and fixing that and there's some high volume nodes. That's how I would use the day types, right? This case that we're currently in. You're in a D shape, you're closed neutrally. I mean, you're right at the POC. If you close, let's say they didn't have this spike. Let's say they close somewhere here, right? In this range, that would be a slightly different story. You're in a D shape and you're neutral bearish. If they closed somewhere at the high end, let's say here, that would be neutral bullish, right? It's a neutral day with a bullish sentiment. and I would expect them to continue on Monday. So here's a little bit of a neutral, but the reclaim of the value area low and how aggressive they got there is what's leaning me that they're gonna try to push this tomorrow. And I don't know if they have news or if anything's scheduled, but that's just my sentiment. Does that
No
make sense?
news till Wednesday.
Okay. So here's your range extensions if anyone's wondering. This explains them. It has a bunch of questions before I release the quiz. If you guys have time, maybe read through it again. Opening range types, this covers the 4 types. So you have 5-day types and then you have 4 auction types, right? It's good to know them and to be able to visualize them. And then you also have 4 types of value areas and opening types compared to the value area. So 4 value areas, 5-day types, and 4 open drives. I did start something here. I'm not nearly done. I'm going to create a PowerPoint that's 100% focused on market profile and simplify it much more than what you see here and give you a little bit more examples on how you can trade